is every day is uncertain. I mean, whatever happens in Siachen, whatever happens in Ladakh and Kashmir, uh, you have no idea that how the situation goes, and people don't know actually. In fact, we talk about our nation and other stuff. So he's gonna share a lot of stories about these these instances that happened and what he, while he was in command, and how he managed the entire day in the life of a soldier, that he was going to share into our conference. So I look forward to everybody joining the conference and registering as soon as we release the circular today, later morning. And as speakers, another video also, I hope everybody has seen the Madhvan video, but I can still play it. Time is now there, 10 minutes, so we shall go
Yes,
ahead
sir.
with. So now 300 members are there. So for the sake of time, good morning, a very good morning to all of you on the weekend, Saturday. As the topic is very prominent, economic substance regulation.
I'm muting all.
Yeah, please.
Now, Anurag, you can unmute yourself and then we can go ahead.
All right. So as the topic of economic substance regulation has very much prominence in today's time, considering the deadline on 31st December for the businesses who are actually doing performing the relevant activities. For them, it's very, very important. Essentially, it becomes more important so because your deadline for written VAD written filing is also 28th, so you have to really work out on the situation. And considering the new regulation brought the Federal Tax Authority as assessing authority, it becomes more so important as well that information that you're going to submit in ESR report and your notification should be very much accurate, and it should be in sync with whatever you reported to the tax authority. That's important thing. Reporting brought a lot of new challenges, new dimensions. There is a new way. So there's number of apprehensions, confusions with respect to duplicate activities reporting. So our speakers today, CA Jayaprakash Agrawal, our own executive committee member, and our past chairman, CA Hanumant Prasad ji, Hanumant Kumar, who is going to talk on ESR, and the session will be moderated by none other than CA Manoj Agrawal, who is executive committee member and very passionate about tax. As we have seen the video of Lieutenant General Saeed Ata Hasnain on the military side of things, CA Manoj Agrawal has a passion for tax, and he continue to work towards betterment of our members' knowledge and enhancement. So the session will be moderated by him. And as we said, that ESR holds importance not just because the regulation is new, and not just because reporting is going to be tight, not just because the Federal Tax Authority has been appointed as assessing authority, but it plays a significant role in transparency. It plays important role in terms of providing the information from the UAE to the rest of the world should you fail to meet the substance. It also hold importance for those who is having various offshore entities here and very flexi desk organizations here. It also hold importance for those who has holding companies here, so that they need to look into their core existence of the purpose of the business here and fulfill the conditions laid out in the regulation. So without a further ado, I want to invite our chairman, CA Anish Mehta, for the chairman's address and a brief on the annual international conference of ICI Dubai chapter. Over to you, CA Anish Mehta, Chairman, ICI Dubai chapter. Thank you very much for listening.
Thank you, Anurag. And it's nice to see that you carry a great smile in the morning. And actually, it's nice to see that almost 400 people on this Saturday morning have joined through the Zoom. And I'm sure there must be around 100 people or 70, 80 people at least on the YouTube. So I think it is very clear that whenever you do VAT, ESR, anything on compliance, I think our members are more than happy to support us, our initiative. And as you said, today morning we have three experts with us. Hanuman Saab, the past chairman of the chapter, and who also I know. Now it will look like everything I'm connecting to the annual conference, but I can tell you he's really passionate about the ESR. Whenever you have a conversation with him, at least he devote 10 minutes on the ESR. So welcome Hanuman Saab, and Jay and Manoj. I'm sure every member knows them. So Manoj is the famous focus group coordinator guy, and the Jay, the famous focus group IT guy. So when you have this deadly combination, I think this day today will be great. And since we have kept 10 to 12, so after learning, you can enjoy the rest of your Saturday. So once again, I welcome every one of you. As Anurag said, obviously I'm not the ESR man, so I'm not going to talk about the subject. We have subject matter experts. But I'm going to talk about the annual conference, and I'm looking forward. Each and every one of 2,600 plus members should join the annual conference, because the entire committee is working so hard to develop the program of that day. And that day will be a little long. It will be from 12:45 to 10 p.m. in the night. So you don't have to do anything other than watching the annual conference that day. Plus, we will also have a lot of sponsors related activities from the 11 o'clock onwards, 11 a.m. And a lot of gifts, lot of prizes once you visit our sponsors, because they also expect a lot of support from us, particularly in this pandemic time. So I request each and every one of you to visit more than one sponsor stall. We are trying to set up interactive, although virtual, but real interaction stalls, which we will showcase on the 25th. There will be video will be released that how to navigate through the entire software of the conference. There will be many factors. You can take selfie, you can go to social media links, post it. So we are trying our best to develop the state of art conference facility, and it will be one of its type. So please do visit from 11 o'clock onwards, all our sponsors, and definitely on the conference hall also. Just take little 2 minutes of time, because the first time we'll be now I'll be inaugurating the entire this thing. We'll be showcasing that what all this annual conference lies. So I'll just share my screen, and this we will obviously send through circular also. So let me open it, and this will be the how the entire annual conference will look like. It will soon be on your screen. So if someone can confirm if it's on the screen.
Yes.
Yeah. So chief guest will be Sheikh Nayan Mabrak Al Nayan, His Excellency. Dr. Aman Puri, the Consul General of Dubai, has kindly accepted our invitation as guest of honor. Other guest of honor and keynote speaker will be Padma Shri awardee Yusuf Ali. And I'm sure everyone knows him. He is the chairman and managing director of the famous Lulu International Group. Then the president and vice president of ICA has kindly consented to grace the event. Then we have another Padma Shri awardee, Dr. Azad Mupen, who will give a special address to all of us. Then we have another Padma Shri awardee, Dr. Uddhav Kumar Bharali, and he is commonly known as the Jugaad Man. So you will see in his talk so many inspiring things that he has made from the Jugaad. He has also written one book called the Jugaad. So looking forward to hear all of them. Then we have 5 eminent guest speakers from the different walks of life. The first one is CA Krish Iyer, who is the president and CEO of Walmart India. He's now the former president, just retired. Then Anurag has already shown you the video of Lieutenant General Syed Ata Hasnain. Then we also have Miss Vibha Kagzi, who left her $1 million job and started a company to teach the children and to make them get admitted into the top universities of the world. So it will be another inspiring story. Then we have another inspiring story from Miss Lavina Hansraj. She is a renowned model and runner, but got inspiration at the age of 40 to do something for the country and has won lot of gold medals and silver medals for the country. So another inspiring story we'll hear. Then we have Mr. Shriram H. Iyer, who is the head international banking group ICICI Bank and also deals with the entire NRI remittance business. So we'll have technical session with him. Now this is not over. There will be another two features of the conference, which will be the Bollywood celebrity and inspirational speaker R. Madhavan will grace the event and will talk to us. And then at the end, icing on the cake will be a Bollywood singer performance for Monali Thakur for an hour. So this is all with what we have in the annual conference. It's an entire 1 day full jam-packed this thing. And we want entire 2,600 plus people plus our paid registered members should attend this event because there will be a lot of surprises as well. When I talk about the sponsors, obviously all our annual sponsors are there to support us. But we also have event sponsors, which are 14 of them and is still counting. Still people are approaching us to take them as event sponsor. If you also have any lead, any of the member, you can approach any XCOM members and we'll guide you what are the packages and how someone can be associated with the Dubai chapter for this annual conference. So we have diamond sponsors Ajmal, Saudi German Hospital, then gold sponsors Burjil Securities, Grove, HLB Hemp, Nikai, Oracle, Pan Emirates Furnishings, then silver sponsors Efri Venture, Business Bid, Ideal Management Consultants, Let's Venture, which is a new venture in India, Royal Palace Furniture, and Tax Sutra Kasar, which is again a tax consultancy firm. So once again, thank you for listening to me. Looking forward to welcome each and everyone of the on the annual conference and have a great day. Over to you, Manoj.
Thank you, Chairman Sir. It's a good insight about the annual conference, and it gives us some excitement also to be part of the event. Thank you very much. Come back to the main topic on the ESR. Like we all are aware, government has changed everything, including the definition of licensee, exempted license, branches, and in a foreign corrected person as well. And on top of that, they have changed the penalties as well. Initially, penalties for non-filing notification was 10,000, but with the new amendment, it is now 20,000. So to decode each and everything, we have two prominent speakers with us. CA Hanumant Kumar, he will take us through with the amendments and the requirements, and Jay Prakash Agarwal will take us through on the notification and annual report filing. So to give a brief about both, one will take the functional analysis kind of thing like we used to do for transfer pricing, and Jay Prakash will take the administration part. So let's start the event, and to introduce CA Hanumanta Kumar, would like to invite our fellow member CA Rajiv Hira to introduce him.
Thanks, Manoj. So I think Mr. Hanumanta is a known figure with the chapter, but it's good to know more about our past chairman. So Hanumanta has a professional experience of more than 2 decades, and out of which 20 years is Dubai itself. And he worked with various organizations from 94 to 2009, before he founded the well-known firm or consultancy firm in UAE, which is MCA Consulting, Management Consultants. He is a youngest chairman of ICICI Dubai chapter and worked for more than 8 years under the chapter framework. I think he still works quite effectively with the chapter because we get a lot of insights, information, and a lot of his experience on what and how to be done the things. He has an experience of working with a lot of ICI president itself, like he worked with Mr. Ashok, Mr. Kamlesh Vikamsi, Mr. Nilesh, Mr. Khimji, and none other than Mr. T. N. Manoharan. So he has a great experience and he addresses various topics. So from VAT to excise, we learned a lot of things on account of AML, BEPS, CBCR and transfer pricing were core competences which Mr. Hanumanta carries it. Mr. Hanumanta, over to you. Looking forward for a great session and a lot of insights.
Thank you, Rajiv, for your kind words about Hanumanta sir, though everybody knows him. So it's over to you, Hanumanta sir, to take us through about the amendments and all recent changes and each and every part of the ESR requirements. So it's over to you now.
Yeah. Is the presentation visible?
Yes, sir, it's visible. Just make it blow it up.
Yeah. Perfect.
Thank you.
Thank you very much, the Institute of Chartered Accountants of India, Anish Mehta, Manoj, and all the office bearers, and Rajiv. Thanks a lot for a kind introduction. As we already passed 25 minutes, I will straight away get into the topic. So the entire session today has been divided into, say, 5 sections. What I'll be doing is I'll be covering first 4 sections with the effect of introducing the new regulation, which is 57 of 2020, as well as the guidance, which is Ministerial Decision 100 of 2020. The earlier regulations, which is 31 of 2019, as well as guidance 216 of 2019, have been repealed. So you just have to ignore those completely. So what I'll be taking in these 4 sections are what are the key amendments in the definitions, key changes in the relevant activities. Not all relevant activities have undergone change, only few have undergone change. There has been a significant change in the governance, disclosure, penalties, and there was no change in the test. Whatever the principles remained before and today, both are same. However, there are some guidance notes issued on the test as well. Now my fellow speaker Jay will cover on the notification as well as the report. He will run through the forms, he will run through the administrative aspect of it too. So as I mentioned, all the red colored one are repealed regulations, so no need to go much in detail about that. So the new regulations, if you take to the journey, I think somewhere in August, both the new regulation 57 of 2020 as well as 100 of 2020 ministerial decision, and they have also published 1st September 2020 very good frequently asked questions. In fact, there are around 40 plus questions. Each one of you can go into that. I think that gives a very good understanding of the regulations. And end of October, they have released guidance on both notification and report. So they also released at that point of time template, and which underwent some changes, and finally now the both notification and report went online, and it is available in the portal, Minister of Finance portal, from 1st December 2020. The key highlights of the new regulations are there has been a change in the definition of licensee itself, and they've introduced a new definition called exempted licensees. Earlier, the exemption given to government entities which are owned 51% above are no longer exempt. And there has been a significant amendments in the definitions of connected person, foreign connected person, and relevant income, especially connected person, foreign connected person. That changed the complete spectrum of distribution service center business, headquarter business, as well as IP business also. Then they introduced new definitions, or probably they've given a more clarity on what is group, what is M&E group, and they've also said what is consolidated financial statements. And there was some confusion on the branches, whether a branch of a foreign company operating here or within UAE entities having branches either outside or within UAE also, they have clarified. There are certain changes come in the relevant activities. Significant change has been in distribution service center business, and a new authority has been introduced, which is an independent authority, Federal Tax Authority, to be the national assessing authority. The earlier powers given to regulatory authorities has been taken back or probably reduced. They will do a more of an administrative role, and most of the key powers has gone to Federal Tax Authority. And unlike earlier, both notifications and reports were supposed to be submitted to the respective regulatory authorities. So there has been some non-uniformity as far as the formats were considered. Now that it has gone live with Minister of Finance across all licensees, they have only one unified notification, one unified report also is there. And recently, last Thursday, not this Thursday, the previous Thursday, Minister of Finance has conducted a workshop to the public, to all the licensees, where they have clearly mentioned and repeatedly mentioned, saying that there is no need to file notification if the licensee is not carrying out any relevant authority. If at all licensee carries out relevant activity only, the question of notification will come. Then only there are some conditions to see whether you are subject to either exemption or subject to filing any report is concerned. And as far as ESR tests are concerned, as I mentioned earlier, there are no significant changes, just some clarifications have come, more of a guidance in nature, which I will run through in the subsequent slides. Now let us look into the key amendments and definitions. So the definition of licensee has changed. Now they said that either a juridical person, okay, incorporated inside or outside the state, or an unincorporated partnership, limited or general partnership, registered in the state, that carries out a relevant activity. Only these are the licensees. Only if you are a licensee, this particular regulation, economic substance regulation, is applicable. Otherwise, economic substance regulation is not applicable. Again, in the frequently FAQs, if you see, they mentioned a natural person, sole proprietorship, trust and foundations are not considered as licensees. They brought in a new concept called exempter licensee. Okay, if you are carrying out on a relevant activity, okay, then if you if you fall under any of these four categories, you can still claim an exemption. Exemption means you have to file a notification. There is no exemption from filing the notification, whereas you don't need to file the report. Who are all come under this particular category? First one is a licensee, that is an investment fund. Second is a licensee, that is a tax residence in a jurisdiction other than UAE. Third category, very important category, a licensee that is wholly owned by one or more residents in the UAE and meets meets both the conditions. One is it carries out business only in UAE. It is not part of any M&E group. Fourth, a licensee that is a branch of a foreign entity, the relevant income of which is subject to tax in a jurisdiction other than UAE. In these four cases, you can claim the exemption. Of course, to claim an exemption, along with the notification, you need to submit sufficient evidence, okay, to substantiate its status as an exempter licensee. In case if you are not in a position to provide sufficient evidence, then you will have to meet with the entire economic substance regulation. What it means? It means you will have to also, in addition to filing the notification, you will have to file the report as well. So I'll go through each of the four exempted categories. One is an investment fund. What does it mean? Either the fund and the SPV. Many times you route the investment through a step down subsidiary or an SPV. In that case, a fund as well as the SPV are exempted from ES regulations. That means they don't need to file the report. Whereas the end company, which is an investment company or an investee company, which is a portfolio company, they are not exempt from these regulations. The second category is a licensee, that is a tax residence in a jurisdiction other than UAE. Who comes under this? An entity which is a tax residence in a jurisdiction outside UAE. For example, you take the example on the right side. Okay, you have a free zone company in say Jebel Ali. Okay, the 100% control and the management license say Ireland. Okay, of that particular free zone company. Okay, and this particular free zone company is subject to income tax in Ireland. Okay, as good as an Ireland company. In such case, this free zone company, which is in Jebel Ali, can avail this exemption with attaching supporting evidence as well. Or an entity, the second category is a new entity carries on relevant activity through a branch registered outside UAE. Okay, the entity is not required to consolidate the activities for the purpose of ESR if it is subject to corporate tax in that country, in a foreign country, and it's a tax residence in a jurisdiction other than UAE, and it also pays corporate tax on all of its income. In such case, uh, you can avail this exemption. Of course, as I mentioned earlier, you need to provide a supporting evidence to prove that you are subject to tax in a jurisdiction outside UAE. The third category, where it led to little bit of an interpretation issue, so I will go through in detail about that. So what they said is an entity wholly owned by UAE residents. Okay, it has to be ultimately wholly or beneficially owned either directly or indirectly by UAE residents. What it means by UAE residents is are either UAE citizens, locals, and individuals holding a valid UAE residence permit. These could be even a foreigners as well who reside in the UAE, provided these are not form of a MNE group. Okay, and all of its activities are exclusively carried out in the UAE. The resident UAE resident owners in the of the entity reside also in the UAE. So what it means is, second condition is, they are saying the entity must therefore not engage in any form of a business outside UAE to avail this exemption. If you go to page number 6 of the guidance given in notification, they very clearly mentioned that licenses wholly owned by UAE nationals or UAE resident individuals that are not form of multinational groups and that carried out business in the UAE, they also put in the bracket including activities that are not relevant activities. Obviously, if you are carrying out an irrelevant activity only, you will come to the next stage of checking whether exemption is available. Here they have mentioned clearly, including activities that are not relevant activities. So what are not relevant activities means other than those what has been specified as relevant activity, which are that 9 activities. So assume that an entity is doing a finance lease business, say they are lending to other group companies for an interest. Okay, so what will happen is initially we were on the assumption saying that, okay, if a UAE entity is lending to another UAE entity and their entire business happens here, they can avail this exemption. Whereas now by putting this particular yellow highlighted one, where they said that including activities that are not relevant activities. So most of the companies here either do export or an import. It is still not clear whether doing export or import is carried out from UAE only, or these, because these are not relevant activities. So we still don't know whether this exemption can be avoided. But if you look at the subsequent steps, suppose you prove the substance that you have economic substance is proved in UAE, then you are passing. Suppose assume that you are not in a position to pass the test, you fail the test. So what is the consequence of filing a test? So your information will be shared with the other country's Minister of Finance. In this case, again, you will be sharing with the same ministry only. I mean, both comes under Minister of Finance UAE only. So looking at that, the impact, there won't be any impact because there was no harmful tax practices that could have taken place. This is my personal view. We'll wait and see if any clarification. But if you look at even if you are availing exemption, they're asking about the shareholding pattern, your structure. They're also asking your financial statements as well. So going by a conservative approach, I would recommend to go for a report, because in any case you are providing financial statements and everything. Might as well you file the report also. In case uh, subsequently, if there is a clarification comes, no need to file a report. You can avail exemption. Probably from next year onwards, you can avail the exemption. Again, it's purely my personal view. Just because of the word they have, just because of the yellow highlighted thing that they have included in the guidance note given on the for the notification, you can all refer to that particular para in page number 6 of guidance note on notifications. So what is M&A group? Where you have two or more entities, the tax residents of which are in different jurisdiction, or an entity that is a tax resident in one jurisdiction and they are resident in another jurisdiction. So in such case, whether it is a PE or a branch, okay, those also will be part of your M&A group. So let us take some examples to understand what is this M&A group. Assume that company A, company B, both are in UAE. They conduct transactions. They are group companies within UAE. So then everything happens within UAE. So they are not, part of M&A group. The same example, you have group entities A, B, C. A and B are in UAE and C is in Oman. Oman is a entity that is subject to corporate tax, income tax in Oman. So obviously, when you have entities, one entity is subject to tax in a different jurisdiction. Obviously, they lose the status of M&A group. So, obviously, they will fall under the M&A group. So, A, B, C are part of M&A group. So, they cannot claim any, A and B cannot claim any exemption. Third category is UAE branch of a foreign entity. So assume that you have a UK company having a branch here, and assume that the branch profits are subject to tax in UK. In such case, you can avail, the UAE branch can avail exemption by showing supporting evidence saying that you are being taxed in UK. For example, here I've given a simple examples. Parent company is in India, and you have a branch in, say, mainland or a free zone. Okay, this free zone or a mainland can avail the exemption provided it is taxed in parent company, which is in India. Second scenario you take on the right side, a parent company is in Bahrain, a branch or in either in a free zone or in a mainland in UAE. Okay, they cannot avail exemption because such branch or a mainland company is not taxed in Bahrain because there is no corporate income tax in Bahrain. So, in short, overall subject to regulations, all UAE onshore entities, free zone entities, offshore entities, and a branch of foreign entities, unless it satisfies the conditions of exemption, who are exempt: investment fund, either both the fund as well as the SPV, entities that are tax residents outside in UAE, entities wholly owned by the UAE, and all activities are carried out in the UAE. Branches of foreign entities whose incomes are subject to tax outside UAE, and who are all not considered as licensees, natural persons, sole proprietorship, trust, and a foundation. So, as I mentioned, significant changes have come to the definitions of connected person and foreign connected person. So, in the context of distribution service center business, headquarter and IP, this has been a substantial change. So let us look into the connected person definition: an entity that is part of the same group as a licensee or an exempted licensee. Again, they said it's a part of the same group. Now, what is the definition of group? Group is two or more entities related through ownership or control, such that they are required to prepare consolidated financial statements for the financial reporting purpose under the applicable accounting standards. I've just mentioned IFRS because that is widely used in UAE. So it is related through either ownership or a control. Okay. and they are required to prepare a consolidated financial statements. Many says that we don't prepare a consolidated financial statements. See, that is not relevant. Okay, if you are required to, or where you ought to, prepare a consolidated financial statements, then you fall under the group definition of a group. Okay, and what is foreign connected person? A connected person that is not a tax resident in the UAE. So whoever is in the M&A group and whoever is residing outside UAE and they are subject to tax in that particular country, they will fall under the foreign connected person definition. So any transactions, so now IFRS 10 requires a parent company to prepare consolidated financial statements. Okay, I will not go in detail because we are all familiar with IFRS. So a parent company is that controls one or more entities. Okay, and you have to look at the control definition. So control you will get either by way of power or exposure or rights to variable returns, or a combination of both power and exposure or rights to variable returns. So again, they also defined what is consolidated financial statements. The financial statements of a group in which assets, liabilities, income, expenses, and cash flows of the ultimate parent company are presented as those of a single economic activity. So now let us look at some of the definitions. Earlier, in the earlier regulations, what they said is, if you are doing any business with a foreign connected party, okay, you are supposed to, those transactions come under the regulations. But now here, only if you are required to prepare a consolidated financial statements, only if transactions happen between those two entities only, they will come under the they will be subject to these regulations. Let us look into few examples which will be, which will make which will clarify this particular area much more clearer actually. So assume that ABC UAE is buying goods from XYZ in India. Okay, they are purchasing goods. So it means Dubai entity is purchasing from a foreign connected person. So this is considered as a distribution service center business because XYZ holds 55% shareholding in ABC. Assume that they are controlling ABC, and whereby XYZ is required to prepare a consolidated financial statements, then this particular transaction comes under the as a relevant activity within distribution service center business. Assume that another example, similar example, ABC also buying goods from PQR China. Okay, they are also related entity, whereas PQR owns only 7% of ABC in ABC. So by virtue of assume that PQR is not in a position to control because of their lesser shareholding. So in this case, although it is a transaction with a related party, ABC is buying from a related party. These two entities are not required to consolidate. Hence, although they are buying from a related party, this is not a distribution service center relevant activity. So whereby you don't need to consolidate. So where this particular regulation itself is not applicable to this particular transaction. Similarly, as you take another example of services, parent company UAE is selling services to a subsidiary in say Saudi Arabia. By virtue of a subsidiary and having control, parent company in UAE is consolidating KSA's financials. So whereby this particular transaction will become a service center business and it will be a relevant activity. It will be a relevant activity. So regulations will apply here. A similar example, it also provides services to an investment in RSA. They are, and by virtue of investment, they are not required to consolidate. These services, whatever you do to the say South Africa, is not considered as a service center business, as it's not form of a fall under the group definition. So you will not. So this ESR is not applicable to this particular transaction. So it is not a relevant activity. So many have raised this question, so I thought I'll put one example. Assume that one individual is controlling, holding say 100% all the entities, and there are transactions happening between these entities. For example, X, an Indian citizen, owning 100% XYZ Private Limited in India. He also owns ABC LLC in UAE, and he also owns PQR in China. Okay, and there are certain transactions happening. So they are buying goods. This particular entity is selling services. So whether for ABC, since they are buying from XYZ Private Limited and selling to PQR China, whether these will fall under the definition of distribution service center business. So although Mr. X, okay, is not required to consolidate as per IFRS, because only if there is a parent company's subsidiary and entities holding is control, one entity is controlling another entity only, where you required to do a consolidation. In this case, uh, X is not required to prepare any consolidated financial statements. So strictly, if you go by the definitions given in the regulations, okay, these transaction between these three entities will be outside the scope of ESR. However, if you look at economic substance regulation, it has come from BEPS action point 5. If you look at substance over form, BEPS action point 5 talks about harmful tax practices. So here the harmful tax practice can happen uh, uh, even in this kind of a structure. So on a conservative stand, I think if these entities are controlled by indirectly by this particular person, it is better that we report these transactions under relevant activity and file the both notification as well as report. Again, it's my personal, I mean, purely my personal view, because looking at the substance over form, if you look at all the entire regulation, they are going by substance over form. So if you look at by substance over form, this entity can get into a harmful tax practices or shift profits artificially without having a substance. So it is better you report these transactions in the ESR. So let us look into what are the significant changes in the relevant activities. Again, relevant activities 9 will remain as 9 only. You all may be aware that all business activities are not relevant activities. Okay, not all, only a few. So only if it falls under one of these 9 activities. And again, whether there is any threshold limit, no, even a receipt of passive income also, if it falls under one of these 9 heads, it will become a relevant activity. So with the new regulations, there has been some changes in distribution service center business, lease finance business, holding company business, and intellectual property business. Rest of the relevant activities, not much of change. The significant change has come in distribution service center business purely because of the change in the definition of connected person and foreign connected person, as well as the definition of group and M&E group. So in distribution service center business, because why I circled here is this covers 80% of the businesses in UAE. So I'll cover only the relevant activities which had little bit of an amendments. So purchasing from a foreign connected person, again we'll have to meet with a new definition of foreign connected person. Component parts, materials for goods or goods ready for sale, and reselling such parts, materials or goods. So they removed the word importing and storing in UAE, and they removed outside UAE also. So this is purely distribution. It means trading. If there is any assembly or a manufacturing is happening here in UAE, then they are not a relevant activity. Even if you buy goods from a foreign related, foreign connected person and using it as a manufacturing, you are adding some value addition in UAE, then it is not coming under distribution service center business. So it has to be a purely trading. You are buying, and without any value addition, you are just selling it. Then only it will come as a distribution business. In services, providing services to foreign connected person, they removed the word in connection with a business outside UAE, they removed. So any services you render to foreign connected persons, again the foreign connected person within the definition, the new definition given the regulation. So these two will come under the distribution service center business. Lease finance business, only they said is they will have the meaning as set out in the law governing the activity in the state. Okay, lease finance business has got two aspects. One is a lease, another is a finance aspect. Okay, some amendments have come through Ministerial Decision 100, which is on the guidance. They said that lease finances encompasses licenses that offer credit or financing for any kind of a consideration, including financing to connected person, intra-group financing they mentioned. And they also mentioned making loans to related or unrelated parties in UAE and outside UAE. Okay, so since they mentioned in UAE, and that is where we looked at the exemption also. Okay, um, uh, where if you are lending within UAE and if you have other non-relevant activities outside UAE, you are it is better on a conservative approach to file the notification as well as the report as well. And they were also included the cash pool arrangements, okay, into this particular lending activity also. So any income that you generate cash pool from cash pool arrangements, that will also be covered by this particular lease finance business. So lease is covered by Federal Law number 8 of 2018, and finance is covered under Decretal Federal Law 14 of 18. Okay. So 8 of 28, the law mandates UAE Central Bank to regulate lease financing activity, and accordingly Central Bank shall issue regulations or circulars to license lease finance lease activities in the UAE. If you look at Federal Law 8 of 2018, they said that central bank shall issue the regulation for issuance of license to lessors and practicing finance lease business in the state, including license relating to foreign finance lease companies or branches. So they said that they shall issue regulations. To best of my knowledge, such regulations have not been issued by the central bank on lease finance leases yet. So we can wait for that particular district. Similarly, they also mentioned that a register shall be created to register the contract to be executed on the movable property, which shall be regulated under a decision to be issued by the cabinet upon minister's recommendation, provided that the decision should include the body that will manage it and details to be included therein as well as the due fees. So there is going to be a lease register which will be available, and all the rules and regulations I think the cabinet will release the minister's recommendation. This is also yet to come. So earlier we had an issue, if you are into a finance lease, okay, your regulatory authority was central bank, whereas Ministry of Economy was not giving that window to report itself. At least now that we have moved to Minister of Finance portal, common portal, you can report. And finance lease still to best of my knowledge, central bank has not issued any regulations as well as so. Just by reporting, I think reporting this as a relevant activity is good enough, and you comply with whatever is the substance requirements required for this particular activity. If you go to the second activity, which is on the finance, okay, the Decretal Federal Law number 14 of 28 covers all financial activities. So they said that the law highlights the activities that are considered as financial activities and are subject to central bank licensing and supervision. Okay, it includes the following: providing credit facilities of all types, providing fund facilities of all types, including Sharia compliant funding facilities. So as of today, this law is there, Federal Law 14 of 28, which applies to all the licensees that are lending. Okay. Example, they mentioned banks and other financial institutions licensed in accordance with the provisions of this decretal law to carry out the lease finance activity, license financial activity. So if you look at all financial institution definition, even all the companies, corporate companies, LLCs, free zone companies, all will fall under this other financial institutions. So technically, you are required to have a license even to lend any money here. But to best of my knowledge, banks and NBFCs, other than them, no one has been issued so far. So earlier, at least, we were not in a position to report this in uh, notification. But now with the introduction of a common portal in Minister of Finance website, let us report and see here. So because you are providing funding for a consideration, so obviously this will fall under this particular one. Definitely one area is we are not licensed to do this lending. Again, in my view, my personal view is they will look at your lending aspect, because they're asking your total income. Okay, if you go into the report, they're also asking what is the income out of finance activities. Suppose assume that your total income is say 1 million, your interest income uh, through lending activities is say 950,000 dirhams. It means 95% of your activities are from lending business. Your core business is only 50,000. So in that case, probably, it is very clear that you don't have a license to do this activity. On the other hand, suppose assume that you have 1 billion as your total revenue, and your interest income is say, assume that 5 or 10,000, which is insignificant. In that case, also law requires you to have a license, but I think the stand that will be taken will be slightly different. So if you are doing a lending activity without license, significantly, I think that will have an impact by not doing such activities without a proper license. That way, every company can manage their own funds, excess funds available. The treasury can use to do investments, or to optimize the return for the shareholders. But we'll have to wait and see what the stance that will be taken by the central bank or the government. We will have to wait and see. Again, my personal view is, if it is insignificant, it should not be a big much issue. But if interest income is going to be significant income, and you are doing that activity without having license, probably that may lead into a licensing issue as well. Holding company, not much of change. They said that has its sole function and acquisition of holding shares and equitable interest. It earns interest. I mean, it earns only dividends and capital gains as its income. Okay, the by virtue of this holding company, you are if you fall under that, you will have a reduced economic substance compliance. So if you satisfy these two conditions, that's good enough. You meet with the requirements to submit any documents, records, or information to the relevant regulatory authority in accordance with the law that applies to the licensee in UAE. So whatever is your licensing authority requires to be done as a holding company, if you comply with those, that's good enough. Then you have an adequate employees and premises for holding and managing the holding company business. You have adequate employees and premises. Generally, to do holding company business, you don't need a big set of employees. At times, your director himself can be an employee also. That will meet the purpose. Again, premises, a reasonable premises is good enough. This is the only relevant activity where the business or the relevant activity can be managed and directed even outside UAE also. Okay, and you don't need to demonstrate any expenditure also. So you don't need to have a big expenditure also. So those two are not applicable to the holding company. And they also mentioned in the clarification saying that in case you are having a real estate asset in your books, which is you are using it for your office purposes, that is good enough. You will still can avail the reduced compliances, because we are saying here only shares and equitable interest. But if you are having an office for your own purposes, which is appearing in your balance sheet, that is good enough. You will still avail the provision of reduced economic substance compliance. Intellectual property, I think A couple of people have sent questions also. See, there are two things. One is an IP, another is a high risk IP. Okay. What is IP? If you are receiving any income like royalties, license fee, franchise fee, capital gains, from any of the sale, from copyrights, patents, trademarks, brands, know-how. If you are having it an identifiable income, okay, on in your books, okay, then that becomes an IP income. Okay, many times you may have it in your books. Okay, that may be useful for your business, or it may be supplementary to your business, but you are not generating any separately identified income, then you will not fall under the IP category. Only if you are receiving some income, either royalty, license fee, franchise fee, or a capital gain on account of sale of IP, only then it will be become an IP income. Now, once you receive an IP income, you will have to see whether this IP income is a normal IP income or a high risk IP income. So what is high risk IP? So they say that licensee did not create the IP assets, okay, which you are holding, in your books. Second is you are either acquired such IP, okay, either trademark or know-how or anything from a connected person. It means from somebody related party, or you have received by way of contributing to one of the R&D company residing outside UAE. And in turn, what you are doing after doing all that IP what you have in books, you are either selling or leasing it to your foreign connected persons, okay, and you are by giving that to connected persons, you are also receiving some identifiable income from foreign connected persons. Basically, what happens? You are bringing the IP from somewhere outside, okay, where you are not working anything on the IP, and then you are, since it's a zero tax country, and you are distributing that IP to across various parts of the world, and you are receiving income because, and they will claim in their books as an expenditure, and here when it comes as an income, it becomes a tax free also. So two places it is non-taxed. That's why this is called as a high risk IP. So what will happen is this is a very challenging thing for even the tax administrators. That's why if you are in a high risk IP, whether you pass the test, you fail the test, the Minister of Economy, Minister of Finance will share your information with Minister of Finance of the your foreign country where your parent company resides, or an ultimate parent company resides, or your where the UBO resides. So basically, in such high risk IP, because there it is very clear, only the revenues are shifted. They are going to see whether any harmful tax practices have happened, both at UAE and also as well as the foreign land also. So as I mentioned, IP means automatically information will be shared, and both the sides they'll be looking at very, very closely. And in UAE, in addition to sharing the information, they'll also look for increased substance requirements. So they will see whether you have historically exercised a high degree of control. They will see whether over all the DEMP functions, whether it is development, exploitation, maintenance, protection, or enhancement. They will closely look at the employee information. They will see that whether they have that relevant experience, or they will see what kind of a contract that they have entered into, their qualification, their duration. So unless they get a really convincing answer saying that yes, there is an IP here, and on that IP somebody is working it very seriously, you have a business plan, you also evidence decision making is taking place in UAE. So it is just not by keeping IP in UAE, high risk IP, you're also working on it. Only when both the governments get convinced, I think you are safe. Otherwise, whatever money you make out of IP, don't be surprised if that gets taxed in the country where it has been transferred from. So if you look at relevant activities, if you have mandatory, you have to have a mandatory foreign related parties. That is where this connected and foreign connected persons will come. Only in headquarter business, distribution service center business, and high risk IP business. Shipping business, obviously to qualify, you have to be operating in the international waters. If you look at other relevant activities, banking, insurance, investment, fund management business, They are currently also highly regulated, so I don't think any big issue will be there for them. Holding company business, if you're purely into that, you have a reduced substance. And in terms of intellectual property, normal one, not the high risk one. If you comply with substance, that's good enough. And lease financing activities, currently NBFCs are regulated. Unregulated are other leases and other funding activities. Now let us look into the flow chart. So, one second. Yeah. So first, the test has to be, this particular chart is given in the Minister of Finance website itself. First, you'll have to check whether you are a licensee. Okay, is it a corporate body or a partnership in the UAE? If yes, okay, you'll have to move to the next step. If no, so ES regulations are not applicable to them, then you'll have to check whether licensee conducts a relevant activity. If you are not conducting a relevant activity within the definition given in the economic substance regulations, then these regulations are not applicable and you don't need to file a notification as well. This has been repeatedly told by the Ministry of Finance. So if you are not carrying out a relevant activity, no need to even file a notification. Forget even if you have filed a notification in the earlier occasion. Now you'll have to reassess the whole thing as per the new regulations. So you are not required to file a notification if you are not carrying out a relevant activity. If you are carrying out on a relevant activity, then go to the next step of checking, okay, whether you fall under one of the exempted category. Okay, the minute you are in a position to claim exemption, if you fall under one of those four cases, then you need to also, along with the notification, you'll have to file a notification. Along with that, you'll have to also add supporting evidence to substantiate the exemption status. Okay, assume that you are not in the exempted category. You go to the next step of checking whether you have earned any income in the relevant activity. You are doing a relevant activity, but during the year, assume that you are not under income. In that case, you can you are okay only till the time you file a notification. Economic substance report is not required. You don't need to go through the test also. Many times what happens is you are a holding company, okay, you are invested, but during the year you are not received any dividend. Okay, you are carrying on a relevant activity which is a holding company activity, whereas you are not received any income. So you file a notification, no need to file a report. So now let us look into the governance part of it. What are the changes have come? Just give me 1 minute. Let me take some water. Yes. So the governance side of it, now the new National Assessing Authority, which is FTA, has come into place. It's a very good move because it's an independent authority. All the regulatory authorities have also other functions. They're also issuing licenses. So National Assessing Authority is an independent function. There is no conflict involved here. So they will have, they will do completely, they will undertake the assessments as well as they impose administrative penalties. They can hear and decide on the appeals. They can exchange information to the competent authority, which is your Minister of Finance, and they can carry out any other function for the purpose of implementing these regulations. So if you look at the one simple chart, okay, how the entire administration takes place. So licensee or an exempted licensee either file a notification or file notification and report. Then regulatory authority, obviously now with the Minister of Finance portal, we are not even submitting anything to here, but they will have administrative powers. Okay, if you are not filing or anything to be done, probably, it will be routed through regulatory authority. Regulatory authority might interact with licensee. So then it comes to national assessing authority, who does the assessment and impose on penalties, and they will see whether you are met with the test or not. So what it does is, the next stage is competent authority, which is your Ministry of Finance. So FDA notifies the Ministry of Finance in case the licensee fails the test. If they fail, then the information will be passed on, and in case of high risk IP, all the information will be passed on so that they can exchange with other countries also. And if you are claiming exemption saying that you are a tax resident outside UAE, or you are a branch of a foreign company and is subject to tax outside UAE, these two information from the exemptions category, they will share it with competent authority. Competent authority, which is your Minister of Finance, can automatically exchange information with the foreign competent authority where your parent company resides, ultimate parent company resides, or ultimate beneficial owner resides. So when they will exchange, when a licensee fails the economic substance regulation test, they'll automatically exchange information. Or as I mentioned, if you are carrying on a high risk IP, both Minister of Finance here and Minister of Finance in the respective country also will look into it. So they will share your information. In case of you are a tax resident outside UAE, or you are a branch of a foreign entity, in those two cases, okay, since you have claimed exemption, they will share that information with the respective foreign competent authority, so that both the ends, they know that the information what you have shared is correct. And they have given little bit clarifications, the guidance note on the relevant income. They said that relevant income is that recorded in the books and the of the licensee or exempted licensee under applicable accounting standard, whether earned in India, UAE, or outside UAE, irrespective of whether the entity has derived a profit or loss. Many are raised this question: I've got a loss, I don't have a profit, what should I do? This is only a gross income level, nothing to do with your profit or loss. So what it means is, it means all your income without deducting any type of cost or an expenses. So notification has to be submitted within 6 months from the end of financial year, and report within 12 months from the end of your financial year. The new addition which has come is, you have to also give financial statements in the report. Whereas in the notification, if you are claiming any exemption at that stage, you will have to file, you will have to also submit notification to claim the exemption. Again, financial statements, whether audited or unaudited, is not mentioned. But in the report, they have asked one question: are your financial statements are audited or not audited? Okay, obviously when you tick audited, weightage will be more. Unaudited, obviously then the weightage will be less. So when you are undergoing the liquidation, till the time the liquidation, during the course of liquidation also, you will have to file your ESR for that particular period actually. So in the notification, we have covered enough. So if you are not carrying on the relevant activity, there is no need to refile the notification or file the notification, despite the fact that you have already filed on 30th June 2020. So branches registered in the UAE are regarded as an extension of their parent or head office that are not considered to be a separate legal entity. Okay, that's where the exemption also has been introduced. Okay, such a parent or a head office registered in UAE must file a single licensee reporting the relevant activities as of itself, and all of its branches in one composite notification or one report. Let us look into example. Suppose you have an parent company in Abu Dhabi, one branch in Dubai, one branch in Ras Al Khaimah. Okay, if Abu Dhabi company files one composite return or a notification, that is good enough. See, assume that these branches are not carrying on relevant activity. In the report, you don't need to mention those branches also. This is a slightly tricky, we had doubt, but now they clarified. Suppose parent company is in Abu Dhabi, you have a branch in mainland, you have a branch in Jebel Ali. So Jebel Ali comes under the different relevant regulatory authority, whereas this comes under Ministry of Economy. What they clarified is, if you file at this stage one composite notification is good enough. Written within 12 months you'll have to submit. Now the format has been announced. So the report, what are all the contents? I think Jay will go through. Main thing is they've asked for the financial statement, which is new. You have to retain the books for 6 years, okay, and to meet to implement these particular regulations, okay, they will the ministries have been given power that other ministries also have to cooperate to implement these particular regulations. As Manoj was mentioning, penalties, there has been some hike in the penalties. Obviously this shows that the seriousness it's in implementing these regulations. Now let us look at my last section, which is economic substance test. Okay, a licensee meets the economic substance test in relation to a relevant activity in the following cases. There are 3 tests. First test is the licensee shall conduct core income generating activity within the UAE. Second is the relevant activity are being directed and managed in the UAE. Third is the licensee having regard to the level of relevant activity shall meet the adequacy test. Let's look into this little detail. So what is core income generating activity? Although ministry has given for each of the relevant activities certain indicative SIGAs, it is not exhaustive. They made it very clear. These are just indicative. It can be anything more or less, or it could be anything different, which your business or your particular industry will decide. What is non-SIGA? All the support functions and the back office functions are non-SIGAs. Now, if you see what is SIGA, SIGAs are those activities that are central importance to the licensee for the generation of gross income earned from relevant activity. So whatever is that is so important or a key important to for you to make revenues, that becomes a SIGA. So SIGA doesn't mean that it has to be done in UAE. What they are mentioning is SIGAs have to be okay. You have to conduct the SIGAs within the UAE. So what it means, we will go through in this. So basically, whatever is the decision making or whatever is the key agreement signing and all these things that has to be happening in UAE, that is what they're saying. So not necessarily the goods have to come here, they have to be stationed here, then only. So if you are doing a high seas sales, you ensure that the decisions of your pricing, your customer interactions, your agreement signing, and so all those have to take place from UAE. Second test, which is very important, is direct and managed. Okay, here is the one which I'm seeing that many of the UAE companies are struggling. It is not that they have not directed and managed UAE. Only thing is to demonstrate. Nothing has been documented so far. So, what does it mean by direct and managed in the UAE? The licensee board of directors in the UAE, they meet at adequate frequency, okay, required for the decision making. Again, adequacy depends on the level of relevant activity. It could be 1 meeting, 3 meetings, 7 meetings, you decide, okay, but you should be in a position to prove the adequacy. There is a quorum of directors physically present in the UAE. Quorum is either as per the licensing issuing authority law or as per your constitution document, which is your memorandum, articles of association. Again, here is I've come across a lot of articles here. Some articles talks about quorum, some doesn't talk about quorum. So you'll have to, I think this particular area, I think all the licensing issuing authorities also will bring the best practices sooner or later. But if there is no quorum, you adopt to quorum as per the best practices, or you define the quorum in one of the board meetings itself, and comply with that. Normally, a good quorum is at least a simple majority is a good quorum, or 50% is a good quorum internationally. So minutes of the board of directors meeting is recorded and signed by the directors attending the meeting. So minutes must be signed by the directors physically present in the UAE. Okay, minutes of the board meeting shall record the strategic decisions at the meeting. Okay, it is very, very clear. So what is strategic decision is having regard to your nature and size of business. Uh, so you should be in a position to figure out what are the key decisions that are resulting into your say revenues. It could be raw material price negotiation, or your supply chain partner finalization, or your delivery schedules. It could be anything actually. What is strategic for your business, you will have to decide. And they also said that the boards have necessary knowledge and expertise to discharge the duties of the board. The minutes of the board of directors meeting should be kept in the UAE. So they also mentioned one thing is ministerial decision 900 of 2020 said that the test does not prescribe the board members to be resident in UAE. Rather, the board members are required to be physically present when taking a strategic decision. So you also go through saying that whenever the strategic decisions are taken place, ensure that the majority of the directors are here physically. So far, many of the foreign companies have seen that global directors are the directors. Locally, they are not keeping any directors. So I think there is a need to revisit the entire directors. And one more thing in the regulations they have given is, in the event licensee is managed by its shareholders, owners, partners, an individual manager, example, general manager or a CEO, or more than one manager, the above requirements, what is applicable to the board of directors, will apply to such person to the fullest extent possible. So many big companies have global boards. Obviously, global boards will not be in a position to travel to all the countries where they operate. So what normally they do is they have a chart of authorities where they delegate powers, okay, to a manager or a general manager or a CEO. So in that case, such general manager or a CEO locally will conduct all these things, and they need to record these aspects as if they are the board of directors. So these are all the special points for considerations. Okay, uh, your board of directors have to be qualified directors. So in fact, they should be not namesake ones. They should have some good qualifications, experience. Okay, uh, they need to be more local board than the global board. Okay, so that when the strategic decisions are taking, they can be physically present here. Quorum has to be determined in accordance with the law applicable to the licensee or set out in the constitutional documents, which is your articles or both. Okay, you revisit your articles of associations, okay, and make amendments to meet with these regulations. Document the policies, procedures, chart of authority, and get it approved by the board. Many may be having, but it may not have been approved by the board. So get it approved by the board. And proper records of the minutes required to showcase the direct and managed test. Okay, and they also mentioned in view of COVID, where they understand that people cannot travel here. So they said that businesses are requested to consider the possibility of appointing alternative directors in the UAE who can attend the meetings in the UAE to address the short-term practical difficulty. They never said that okay, don't conduct any meetings, but only they are given a power saying that you appoint alternate directors and have the meetings within UAE. And again, this is for a short-term period. Obviously, now more or less COVID is coming to an end, maybe in another 3 months. After these 3 months, probably this may not be this alternate directors option given by the ministry may not be available, or they may come out with some kind of a clarification on that. Okay, direct and managed. What they said is a licensee may elect to outsource the relevant activity to third-party service providers, provided the licensee able to monitor, control, and demonstrate adequate supervision of the core income generating activity being outsourced. Non-core generating activity being outsourced is not an issue. It can be even happen from India or Philippines or anywhere. But core income generating activity, if you are outsourcing, it has to be outsourced to one of the UAE entity only. But whoever is outsourcing, the licensee should be able to monitor and control and demonstrate the supervision. What it means is licensee cannot outsource direct and manage test actually. Okay, that has to be with you only in terms of oversight and control of relevant activity, but the activity can be physically done by somebody else. So the outsource activity must be conducted in the UAE. The employees, expenditures and physical assets of the outsourcing provider are adequate in respect of SIGA. And again, they're saying that service providers, outsourcers will not be counted multiple times by multiple licenses when evidencing the compliance with economic substance test. So outsourcing, in other words, outsourcing must not be used to circumvent the economic substance test. That's why if you see the outsourcing one, they're asking several questions. Are they related party? Is the outsourcing company and your company having the same address? They are checking whether outsourcing arrangement is a genuine one or just a fabricated one. Adequacy test is very simple. They're looking at whether you have a number of qualified employees, full-time employees, adequate to your business. They see whether your expenditure is adequate to the relevant activity and whether you have physical assets adequate to your relevant activity. See, again, what they said is adequacy depends on your size, okay, of the business and whatever you are doing. So the ministry intention is not to incur additional cost on hiring employees or having large offices. Okay, basically you take a pragmatic approach. What is relevant? Obviously, when National Assessing Authority, they're going to do the assessment of your adequacy, they might ask for certain records and documents to prove it. So here they mentioned in the report a number of full-time qualified employees and other things. So what they said is you take it as 52 weeks. Okay, if they work part-time, full-time, so you'll have to put it as a proportionate one. So it can be even fractional also. Okay, one employee may be giving 20% time for 5 business, so it could be 0.2, 0.2, 0.2 full-time employee you'll have to take. But unfortunately in the report, the decimal it is not taking, it is only taking the whole number only. So we'll have to wait and see how to do. If they adjust that particular field, then we can put 0.2 or a 0.3 kind of a thing. Otherwise we'll have to put it to nearest whole number, and then we should have that working to prove why you put the full number actually. So employees need not be your own employees. It could be another entity, or it could be on a temporary or a long-term contracts also. So so what is the whole this thing they are looking at the substance test is whatever is the revenues you are making or the profits you are making, you are artificially not shifting profits or artificially making the money here. They are saying that you have substance, which is your core income generating activities are taking place here. It is direct and managed here, and you have adequate employees, adequate expenditure, and adequate fixed assets to conduct this kind of a business or to earn this kind of a money. So basically, these are not separate, although I've taken as test 1, test 2, test 3. All these 3 will go hand in glove. They are intertwined to each other to substantiate your revenue. These 3 you have to establish that it is done from UAE. If you see, majority will be your directed and managed. So you'll have to prove out in such a way that it is directed and managed from UAE. Okay, with adequate substance of your employees, your expenses and premises, and you have to prove that the core income generating activities by virtue of these 2 are taking place in UAE. With this, I will leave to my next speaker, fellow speaker, on to address a notification and report template. I think we'll take the questions at the end of the session.
Thank you, sir. Thank you very much for substantial information on ESR. So now it's time for our next speaker of the day on the notifications and annual return guide. So to introduce Jayaprakash, I'll like to invite our treasurer to Jayaprakash formally.
Good morning, everyone. Many thanks, Hanumanta Saab, for sharing with us the recent developments in ESR. I just need to re-emphasize one thing, that there will be a penalty of AED 50,000 on failing the economic substance test for the first year, which is 2019. And now we are in 2020. So this is the second year. And still, if we don't establish the economic substance, then there will be a penalty of AED 400,000. So in order to avoid this penalty, I think still we are left out with 11 days. So you can make it. Now it's my pleasure to introduce our second speaker, Jay Prakash Agarwal, who is our ExCom member as well. Jay is faculty with Indirect Taxes Committee of the ICI. He is one of the preferred VAT trainers for the ICI VAT certificate course. He has trained more than 400 trainees across UAE. He has also co-authored third edition of the book published by the ICI on taxes in GCC named Background Material on UAE VAT. He has written various articles for the leading newspapers in UAE. Now I welcome our own energetic ExCom member, Jay Prakash Agarwal, to share his expert views on simplifying the filing requirements. Over to you, Jay.
Thank you, Hari Saab.
Jay, before you say something, I just want to say some few words.
Sure.
You know, as we all talk about fines, see, ICI Dubai chapter members, they well understand the importance of all the regulations, and they are the people who are behind the entire implementation and compliance. So there is no way that ICI members will gonna fail the substance requirement. The fines are for those who are not aware, but the members of ICI Dubai chapter hail always with the knowledge, and they are the people who are drivers of the entire compliance work in the UAE itself. So I'm sure that we all have all are advising our clients or our businesses or our shareholders or managing directors or the businesses about the ESR. So fine is not a worry. Only thing is that we need to take the right call, right time. So Jay, over to you to take us through on the reporting side of things. Thank you.
Thank you, Anurag. I'm audible perfectly fine.
Yes, yes.
And screen is also visible.
Yes, you are also visible on side.
Thank you. Thanks a lot. Let me just align my laptop once, and then we are good to go. Okay. So I'm done. Let's start. I will quickly go through filing requirements, because I think Hanuman Saab have covered the law pretty in detailed way, and everything has been covered. It's only about how exactly we should file, what are the parameters which actually in the return is available for us for filing, right? So I say always simplify, because simplicity is the ultimate sophistication. So let's keep it simple. What you think and me think. I say forget about law, forget about the forms which you see on the screen. I mean, we have seen most of the participants, 470 participants are there, and most of you have already logged in, seen the form, right? I'm not bothered about it. I will not show you the same screen. I will just think, if I talk about notification filing, what I will think about it. I mean, what as an authority I will require a person to file with me. Okay, let's think from that perspective. So I call it ePapa. I mean, if I have to remember what I should file as authority, what I will say ePapa. What is ePapa? ePapa says entity details. If someone is filing, first thing I will ask, what is your entity details? That is entity name. What is the name of the entity? What is the entity type? Whether it's a partnership firm, whether it's a LLC, public joint stock company, what exactly it is, where it is located, that is entity address. And then I will go for your licensing number, because that will help me to identify you, to track you, right? And then licensing authority, because UAE being a country where there are so many free zones and mainland and economic departments for each emirate, you have different licensing authority. So what I will go for is all these 5 things. Forget about law. What law says, I'm not bothered. What notifications, I'm not bothered right now. First, we should be conceptually clear what exactly needs to be filed to make them understand, and then we'll see whether we are capturing the same information or they're asking something really heavy which we don't know, right? So entity name, entity type, entity address, and then licensing number and licensing authority is something which I will ask anyone who is filing, please tell me who you are, right? That is called entity. Then I move to P. P says period details. If you're filing a notification, the next question anyone will ask, we will ask ourselves, for which period we are filing, what is the from date and to date. So according to, they should ask.
We could not hear you just last few minutes actually.
Okay, so entity was clear? No, entity was also not there.
No, it is audible. It is audible.
Okay, everyone is fine. Should I continue?
Now
Perfect.
continue with Papa. E is done.
E is done. Papa बचे हैं, Papa को cover करते हैं. P stands for period details. Period details stands for from which period you're filing, right? I said, forget about notification. We have already seen the notification part. But as authority, if someone is filing a notification with me saying I am covered under ESR, I will say for which period. That is why period details should be filed. That is what I understand. What is A? A is activity. We are talking for last 1 hour on activities. We understood 9 activities. So next question logically should be, okay, you are saying you are filing for ESR. This is your entity details. For this period you want to file. Then tell me which activities you want to file for. What are the 9 active out of 9 activities, which activities you conduct? That is what we should ask for. They're asking for the activity details. And then P is person details. My dear friend, entity is filed, period is filed, activity is filed. Someone is filing, right? It's not an entity. Entity is a legal structure. They cannot file it. Someone is filing. So what we'll ask for? We'll ask for name, designation, email, and contact, right? Same thing. I think on notification is asking name. Tell me who you are. What is your designation in the company? What is your email if I want to contact you? And what is your mobile number if I want to contact you, or landline number where I want to contact you? That is P. So EPAP is covered. And last, I say all other details which you are seeing in notification. What is that? I will tell you. But EPAPA is something in the notification I file. If you look at the notification page, whatever we are seeing from section A to section G, H, I, it's basically all these details. You relook into it, you will see, oh, these are the details which I think should file, and authorities ask me to file. Nothing new about it, right? Now, what are the other details which we need to know which authority is asking? Let's see. Ownership tab. I call it a Mr. India style, the invisible tab. I've seen some communications where ownership tab is not available. I cannot see the ownership tab. What should I do? How should I, whether we should file it, whether it will be wrong filing if I don't see an ownership tab. I will share my observation, what I have seen. Ownership tab will get activated only when you select some different options. What are those options? One is if you're selecting that you are into high risk IP business. Mr. Harman sir has already covered high risk IP will always raise eyebrows of the authorities. That is why the moment you say, yes, I'm into high risk IP, they will go ahead and enable the ownership tab. What exactly will cover in ownership tab? I will cover, don't worry, but it will enable the ownership tab. If you don't select high risk IP as yes, then obviously ownership tab is not there. But if you select as yes, you have to fill in ownership tab. If you say high risk IP is no, but you go on and under exemption category, what is exemption category? We have already seen, Hanuman sir have already covered what exactly in exemption. There are 4 exemptions which is covered. So if in exemptions, if you remember 4th and 5th, that is licensees are the tax resident in UAE. He is declaring that I am a UAE entity, but I am tax resident of any other jurisdiction. If you select yes as an option, yes, your ownership tab will get activated, and authority will want to know where you are reporting it, which country you are reporting it, what is the tax registration number which you have. That is why in exemption category, if you select this, then only ownership tab will get activated. The third option where it will get activated is if license is a UAE branch of foreign company. Again, Hanmanta sir covered this. Licensee, if you are a branch, you are only a UAE branch, your head office outside UAE, and you are getting taxable there in that country or region, then ownership tab gets activated. These are the only 3 fields which when you say yes, then only ownership tab gets activated. Otherwise, it will not get activated. That is the entire form. These 3 reasons you will see the ownership form. Otherwise, you will not see it. When I talk about ownership tab, what it exactly it covers, it only covers 3 things. 3 things will enable the tab, and 3 things they will ask you. Well, what is that? First is the parent company. Parent company definition we have already seen, but I will just summarize. And what matters for me is one which holds majority voting right. That is pretty clear. But something which I'm really cautious about is control pursuant to joint arrangement. If you are able to establish that I'm controlling the entity as a parent company, if I'm established, I am a parent company and I have a joint agreement which gives me the power to control the majority voting rights, which is very relevant in UAE context. My dear friends, please think from that perspective that you are controlling. You're not the majority shareholder. By a joint arrangement with minority shareholders or others, if you're able to control it, then you will fall in the definition of parent company. And think from UAE, it's very relevant when you have one company holding shares in another company in mainland to the extent of 49% may fall into it based on person to joint arrangement. Please think from that perspective. Parent company. Then they will ask you ultimate parent company. We have already seen lot deliberation has been made. Consolidate financial statements if you are required or will be required. There are two parts. One is required, second is will be required to prepare it. Then you have to give ultimate parent company details as well. So parent company, ultimate parent company comes in when there are multiple hierarchies, company after company, and then trust, and then again. So if this is the structure, then you have to give parent company, ultimate parent company. Last part, everything you create any number of legal structures, at the end the profits is owned by a natural person, right? You create structure out of structure, but at the end someone is controlling it. That is why ultimate beneficial owner, we have to identify. And if any individual is controlling more than 25%, you have to, you have to lift the corporate veil and see after structure, who is the ultimate person who's owning it. We have to give these details. And when I say you have to give the details, see here, this is parent company, this is ultimate parent company. What details will ask for? What authority should ask me? Same thing, entity details. And what is entity details? We learned it is basically 5 things: entity name, entity type. I say type is not required. Why? Because sir, I have already said this is a company. I am talking about company. So entity type, they are not asking. They say entity name, give me which is your parent company, ultimate parent company. Give me the address where this entity is. License number, I will rename it to call 10. They are asking for 10. My dear friends, please ensure 10 is not called 10 across. 10 is called with multiple names. Say, for example, in UK, it is called company unique taxpayer reference. That is same thing as 10. UID number in Switzerland, employer identification number in US. All these are nothing but 10. So they may be called with different names, but they are called 10. And then if you are providing a 10, they will say, okay, which country issued to you? And that is by issuing country. So in this case also, it is asking for entity details, simplified form, 5 things they should ask. And logically, these 5 things they will be asking, except entity type, because entity type is entity details. How about ultimate beneficial owner? We have already covered ultimate parent company. These are the things which we have to file for ownership, right? What about UBO? UBO, again, entity. Let's remove the word entity. I don't need entity. You have to file the name of the person, the type of person, whether he's a legal owner or whether he's a trustee, whether he's a beneficial owner, who exactly he is. 10, and issuing country. Again, let's 10 I have already said, so 10 is covered, and I'll go back. Yeah, this is covered. Entity address, 10, and issuing country. This is again asked for UBO. If you see for undership or under ownership tab, all the details which is asking, which authority is asking, is same as we already think should be provided to them to relate whether this is applicable to you or not applicable to you under ownership tab. We talked about E-Papa. E is covered, P is covered, A is covered, P is covered. I will come back. We'll relate back to it. A was others, all others. We have already covered ownership tab. Second part, which Hanuman sir discussed, was exempted licensee. We have already seen the definition. I'll not go into it. We discussed 4. Here there are 5. If you go into the notification, you will see 5 parameters to checkbox. I say, please don't get confused. These 2 should be considered together. Investment fund in SPV or investment holding company should be considered together. One is investment fund directly with the company. Second, sometimes we create a SPV just to disassociate the risk, and then we create the investment fund in it. So both are completely exempted. They are not required to be filing the reports if they satisfy these conditions, right? So basically 1, 2, 3, 4, second and third, we should consider jointly. In notification, you will see 5 parts to it. And when you are filing for it, I told you ownership tab gets activated. These are the 2 parts in your notification. The moment you say yes, ownership tab will come into picture. Otherwise, it will not come into the picture, right? These are the 2 ones which we are talking about. Once you are selecting this, you say, okay, I am falling under this exemption, either wholly owned or investment fund or SPV or tax resident or UAE branch. You also have to provide a supporting document. Okay. What is supporting document? Let's talk what we have to provide. If I say I'm a wholly owned UAE national or resident operating only in UAE and is not part of MNE, what should I provide? First thing they will ask me, what? Shareholder register. Show me that all your shareholders are only within UAE, are individuals. Show me that shareholder register, which we are maintaining. Remember, UBO is live now. In UBO, you are maintaining a shareholder register. The same shareholder register they're asking for. Give me the details that your shareholders are only within UAE nationals or UAE residents. No non-resident is listed there. That is shareholder register. And along with that, to establish, because shareholder register will only carry the names, give me the proof, which is passport and visa, to establish they are UAE nationals or UAE residents. They're asking for passport, visa, and financials. Why financials? To ensure that you are doing entire operations in UAE. You don't have operation. You are not receiving any funds. You are not receiving any income from outside UAE. That is why financials are also requested. I think this is logical. If I give all these 3 informations, I can establish that I am only working in UAE. I'm not part of any M&E group because of my shareholding pattern. I can show it, and then my financials will show me that I'm only earning out of UAE, and therefore can take the exemption. So all these are supporting documents which you have to furnish along when you're ticking this box. Talking about investment fund, we have seen this IPO offers and other stuffs, right? They're asking for the same thing. You have got a SCA license when you register this fund. If you go to SCA website, they will tell you that, okay, all the investment firms are authorized by them. They are issuing a license to them that they can operate in UAE. You have to upload that license copy. And if you remember, I will say PPM or private placement memorandum is nothing but the offer document. When you offer anything to public, what do? You tell him what exactly you are offering, what is the risk associated with it, what is the expense ratio which you will be charging on those funds. All these are covered in this issue document. Let me call it sophisticated name, private placement memorandum. So both these documents needs to be uploaded to say, okay, I'm an investment fund, I have been licensed, and therefore I want exemption from ESR, economic substance. How about tax resident? When you say, no, I'm not, I'm situated in UAE, I'm incorporated in UAE, but I'm a tax resident outside, what they will ask you, simply they will say, okay, from that country, get me a certificate from the authority that yes, you are tax resident there, that we have to provide. If they're not ready, sometimes it so happens the authority may not be giving you a tax certificate, then assessment copy, which can demonstrate that yes, you have reported that entity into that country and that income is chargeable there, that has to be submitted. Very logical. UAE branch, obviously for a branch, certificate may not be given by authority. They say, I don't know, you are reporting me the total numbers. That is why if you see, they have prepared the law very logically. They have not said certificate from authority for a branch. If you are able to get it, it's perfectly fine. If you're not able to get it, then at least you have to submit a tax return copy or assessment copy clearly indicating, look, I have reported the revenue of the branch. That is what they are asking you, right? To establish, okay, give me an exemption. See my tax return copy. I have already reported. I have already paid taxes on it. Whether you are paying taxes, whether you're getting any other reliefs from it, that's a different thing. But you have to show you have reported those numbers when you are filing your tax return. So all these for exemption, you have to do it. Please ensure support that documents are there. Then you will be able to file the notification. The interval, that is notification. I have only covered 4 parts. This is the entire notification form. My dear friends, please just visualize the form. It's ePapa. You give the entity details, you give your period details, you give your activity details, you give your person details who is filing it, and then you cover the ownership part of it. Only 3 tabs. If you select yes, will get enable ownership. Exemption, if you select any of the 5, you have any of the 5, then you have to give supporting documents. What documents we talk about, we have already covered. There are 2 words or 2 fields which interchangeably we use, branch and dual concept. What is dual concept? I think Hanuman sir touched upon it. In notification, you also have to do it. Say if you have a branch in mainland and you create a branch, or if you have a mainland entity and you create a branch in DMCC, now you have 2 licensing authority. You are creating a branch, right? You have a mainland entity and you are creating a branch in DMCC. What will happen? That is called dual license. 2 licensing authorities controlling you. If you take out a DMCC form and you'll see, it will say a branch of a mainland company. This is the legal type or entity type which is given. That is why that is called dual concept. If you have all your UAE mainlands and branches in mainland, that is not dual concept. For dual concept, licensing authority has to be different. If it's not different, you are only a branch and parent entity, not dual concept. So my dear friends, accordingly select the values or the fields saying whether you are falling under dual concept or branch. With this, I'm done with the notification part. We'll quickly cover returns because I can see faces. People just want to understand, just want to go into Q&A mode. We'll cover the reporting filing. I call it a number game. For number game, we have seen for ESR report 3 things were mandatory, which Hanuman sir said 3, right? One was what? Direct and managed. Second is SIGA activities, and third is adequacy, right? I'm talking about SIGA activities. You have to select what are the SIGA activities you are doing in UAE, and then I call it a number game because they will ask you income, they will ask you operating expenses, average number of full-time equivalents, that is your employees, which he was talking about, outsourcing expenses, outsourcing, provide details. If you're outsourcing, they will ask for the provider details, whom you have outsourced, what is the license number, what is the name of the entity, how many employees you have outsourced. So all these details they will ask for along with the profit and loss. This is purely number which they're asking you to establish so that they can compare against your financials which you have submitted to establish whether this is fine or not. That is called number game for me. One question here, which when I was looking into returns, reports, and when we're discussing with clients, I see one question which pops up every time, numbers being asked for the specific activity. What if clear identification of number is not possible? let's talk about distribution business. In distribution business, I'm procuring from both the parties, that is third party as well as FCP, right? My purchases are done. When I make a sales, I do not identify with whether I am supplying from my third party stock or whether I'm supplying from my related party stock. Then how should I segregate those numbers and report to the authorities? There is no clear communication in the guidelines, but I will take a proactive approach. If I'm not able to identify, first I will document why I'm not able to identify as an entity. What is the reason? What puts me into this trouble? Why I'm not able to segregate all these specifically for each transaction? And then I will do a apportionment. What can be apportionment right method? That is, you are the best judge of your business. It can be sales, it can be COGS, it can be anything. You have to decide it. Please do apportionment accordingly and report it, because you are reporting these numbers only for the relevant activity, not the entire numbers. The entire numbers is already going in financials. They will take those financials and these numbers and try to see to what extent you are falling under ESR, right? Remaining pieces, this was generic for all the activities. For specific activities, they have put in some values which is required. I think this is just a small piece of the puzzle. There will be multiple things which they will be asking later on. But if you see, these are the 9 boxes, but these are not the 9 activities, because lease financing, they have distributed in 2 parts. Distribution and service, they have distributed in 2 parts. 2 activities are missing here. That means holding and headquarters. There are no additional questions they're asking. They're only asking you income, expense, operating, outsource expenses, profit loss, number of FTEs, and SIGA. Nothing more, right? For holding and headquarter. For others, there are some additional values which you have to provide. Like for bank, they're asking your deposit value in UAE. In UAE, what is the deposit value which you're setting on, or loan receivables which you're setting on? Insurance, captive insurance. Captive insurance basically means you are into insurance business, but are you providing insurance only to outsiders, or you're also providing to group companies? Group companies, when you provide insurance, that is called captive insurance. So they're asking whether you are providing captive insurance or not. That is what the question they're asking you. Additional questions which they are asking based on the activity you selected. Total value of asset under management. Investment fund, what is the total value of AUM? Whenever we go for mutual funds, other steps, we talk about AUM, asset under management. Similarly, for investment fund, they're asking what is the total value you are sitting on. They want to understand leasing, whom you are leasing, what is the number of leases, what is the book value of assets in and outside UAE. If you're leasing outside UAE or inside UAE, what is the book value, so that they can establish whether your economic substance in UAE, if 90% of your book value of assets in UAE, 10% is outside, you are establishing that I have SIGA operations here, right? Vice versa may be challenging, and then they may want to probe and understand. Similarly, for financing, whom you are giving loans, whether internal parties, third parties, related parties, whom you are giving the loans. They will ask you a specific question, or both. They also put in the checkbox for both, right? And value of loans. Objectives, think from their perspective, what they're trying to achieve. They're trying to achieve to establish whether your economic substance or SIGA activities in UAE or not. If you say most of the value of loans is in UAE, I've given to a party in UAE and our third parties, that gives a clear indication, no boss, you will be economic compliant. Problem will be if you report only related parties and the values are high, third parties are very negligible, then there a problem arises, right? That is what they're looking into. Shipping, number of ships that were operated. Distribution, COGS value, what is the cost of goods sold value which you have acquired for the sales. Industry, when you talk about goods, which industry you are talking about, whether it's FMCG, whether it's oil industry, which industry you are dealing with. Title of goods, whether you're taking title or you're doing a third port shipment, basically from one location to another location without taking any title, and you're getting sufficient margins out of it. That is high seas transfers. So title of goods, whether you are taking it or not. Maintain inventory, you are maintaining inventory in UAE or not. My dear friends, even if you brought the inventory into UAE, putting it in free zones, that will be called maintaining inventory in UAE. Don't link it to VAT and say, no, that is part of outside UAE and will not consider it. The moment ship arrives in UAE and you take the stock, put it in free zone and custom warehouse, that is maintaining inventory in UAE. That will be covered, and you can always say yes to this, maintain inventory. Services, obviously, what is the nature of service? Whether it's a consulting, administrative, software services, what kind of service you are giving in, whether you are only giving to related parties or third party, that is the next question they will ask. And value of service to third party, do you understand? They are just trying to see the rational or proportion of services you're providing. Similarly, for IP, they are looking for value of income, country of registration of IP, where exactly the IP was registered, and if it was registered outside, why you are earning revenue out of it, whether it is just a shifting of profit which was done in past by major companies. That is where IP will always have a high risk, or IP and high risk IP. High risk IP is 100%. It's like you're telling them, please scrutinize me. IP, they will still look into it and try to understand whether you are satisfying economic substance or not. Board of management, you've already seen all these 6 boxes. They are asking you straight questions. They are saying, tell me the number of board meetings done. Tell me number of board meetings held in UAE. If you have done 10, out of this 4 you have done in UAE, 6 was outside. They're asking these numbers. Was quorum physically present? You have already heard Hanuman sir. They're asking the same question in report filing. You have to say yes or no. Are minutes a company? Yes or no. Was strategy made in UAE? Yes or no. Knowledge and expertise? Yes or no. This are yes or no. But they are trying to see is what you are trying to do, whether you can say that your board of directors sitting in UAE or not. My dear friends, in case of LLC, when you have a single manager, you can say, where is the board of directors? Sir, we are talking about strategic decisions. In case of LLC, when there's one manager and there are multiple shareholders or 2 shareholders, if they together come in and do a meeting, that you can say, yes, this is a board meeting where we are taking strategic decisions. For single manager company, cannot be considered as board meeting. So shareholder and manager coming together having a meeting can be constituted, recorded, documented, minuted, and accordingly furnished. But please, as Hanuman sir said, please ensure that all your minutes are recorded, it's dated, it's signed by the person in physical in UAE. That will be required. One question everyone may ask, or I've seen asking, what happens if meetings could not be done due to current situation of pandemic? My dear friends, currently you are filing for 2019. From 1st January 2019 to 31st December 2019, there was no pandemic situation there. It was started in 2020, at least from UAE perspective. So for that period, you should have minutes, you should have board of directors here for meetings, and everything should be there and needs to be documented. Those documents can be asked for, and you have to furnish for it, right? Last part, adequacy declaration, I call it Salman Khan style. Your statement is your commitment, because they are just saying confirm. They say, I confirm physical asset, I confirm I have adequate expenditure, I confirm I have qualified employees, I confirm I am director management engineer. It's basically you're saying yes. They have given you I confirm, you have to say yes, no, yes, no. It's yes or no. That is basically they are taking you by your word. They may come and try to ask you, obviously, as you know, FTA has come in picture, they may ask you, but for adequacy, you just have to say yes for all these boxes, and you will be filing your report, ES report. So basically 4 parts: number game, which is basically your 5 activities you're talking about. You'll file in income, expense, your number of employees, your operating outsourced expenses, and your profit loss. Specific to activity we have seen, these are just teasers. You will be asked multiple questions from the authority. Where entities managed, there are 6 questions: BOD meeting, quorum, and other details. Adequacy declaration, it's a commitment. You say yes, your report will be filed. With this, I am done, and I think we can open the forum for questions. Thank you very much. Manoj, back to you.
Thank you, Jayaprakash. I like the E-Papa and the Salman Khan style. We have no option. We have to say yes, I do. Okay. So before we move to Q&A session, I would like to place on record the vote of thanks. And for that, I would like to invite our fellow member, Sangeeta ji, to please take charge and
Namaskar, everybody. Thanks to each one of the 500 members who joined the session today. I'm sure there were significant takeaways which will add value. After witnessing today's session, I can't help but quote Jack Welch, former CEO of GE, who said, an organization's ability to learn and translate that learning into action rapidly is what keeps an organization apart, and it's the ultimate competitive advantage. ICI Dubai is one such organization. Its members are quick to learn any new law and governance which is released. It has produced homegrown experts in various fields. Today was an in-house meeting. There was a home comfort to it. Thanks to our very own, everybody's favorite past president, Mr. Hanuman. Your detailed dissection brought a lot of clarity. The prince of acronym, he has this wonderful habit of coming up with acronyms to remember things. EPAPA, fellow EXCOM member Jay Agarwal, and thank you very much. Popular and much loved tax expert, fellow EXCOM member Manoj Agarwal, thank you very much. Thanks to our principal sponsor, Danube Group, Ali, Lulu, Shua, Platinum sponsor, Century Financials, Creston Menon, and MMJS. IFCO, AGMC, CRIF, Clyde & Co, Media Partner, Khaleej Times, Institutional Partners, DPS, Banking Partner, BOB. Dear members, the countdown to our much awaited first in the history of the chapter, the digital annual conference is just a week away. Looking forward to meeting you all on 26th. Thank you very much. Thanks, Manoj. Over to you and over to the question and answer session.
Thank you, Sangeeta ji. Thank you very much. And once again, thanks to both the speakers. And before we move to Q&A, I think let us have some small poll. So it's kind of a quiz, simple one. And each question will have 30 seconds time to reply. It's anonymous. If you want, both the speakers can explain and then we can move ahead with the live Q&A session. So I'm launching the first question. It's very simple. So it's a visible, Jay?
No, it's not visible. You have to launch the you have clicked on launch.
It's visible.
You are the host. Jay, actually, you are the host.
Okay. Then it's not visible to me. That's fine.
Yeah.
मतलब host participate नहीं कर सकता, ये तो clear है.
Yes.
Host and co-host can't participate.
The answers are coming. I see that we need some expert opinion on this. Time ticking. ABC establishment, sole proprietor and proprietorship entity in UAE engaged in few relevant activities. Is ESR applicable? Guys, simple but little tricky question. It was explained well in detail by Hanuman sir also. So it's time to end the poll. Share the result. Hanuman sir, over to you. If you can explain.
Am I audible?
Yes, sir.
Yeah, okay. In the licensee definition, okay, this was given as not applicable, but there has been a lot of queries on this front. What happens if I'm a 100% subsidiary of a foreign entity, or I'm an entity in a free zone FZE with one single shareholder? What will happen? Okay. I personally felt this particular non-applicability is given to individuals and proprietors, which are generally considered to be individual actually. But the minute you are a single shareholder in a free zone, that also comes with limited liability. Normally, proprietary means it's an unlimited liability entity wherever you go globally. So single shareholder company or a single man company, it is for all practical reasons, it's a limited liability company. Okay. I take a conservative stand of filing notification written if you are carrying on relevant activity. For that matter, all subsidiaries, 100% subsidiaries are single shareholder only. So they will also get FZE license only. So I will go with this particular stand.
Yes, thank you, sir. It's quite a tricky one. So I think the intention of the law is to exempt or not to applicable on the natural persons. If it's a shareholders, then it may trigger. Okay. Correct. Second one, again the easy one. It was the question which was being asked in the focus group, and few experts has already replied. Can the UAE company claim exemption? UAE company 100% subsidiary of FCP. UAE company 100% subsidiary. So focus on the words, on the exemption categories. Still 200 people have not answered. For them, I am giving again the hint. It's a subsidiary I have written. And I hope that member of the focus group will answer correctly to this. So Jay need to read the question again. I'm ending the poll. Jay, please take.
Yes, sir.
Can you please explain on this?
Okay. Let me put this way.
You are not audible.
Not audible? Now it's fine?
No,
Hello?
Still not audible.
Why? What's the problem
Yeah,
here?
now it's okay.
That's fine. Okay. Now, if you remember what I said, what Hanuman has also said, that in case you want to take the exemption, your income should get taxed in the other country. Consolidation does not guarantee that you're getting taxed in the other country, right? Consolidation is only for reporting purpose. You are doing the consolidation as per IFRS, US GAAP, or any other mechanism you want to do it. So since you are not getting taxed because you don't declare it, if you take your returns also, you will not declare that 100% subsidiary income in that country. Obviously, you are not getting exemption, and you cannot go for exemption. That is my understanding.
Just to add, this exemption is mainly available to only branches because, as I mentioned in my presentation, branch is an extension, okay, of your head
Yes.
office. Okay, whereas subsidiary is a separate legal entity with its share capital. Okay,
Right, sir.
for all practical reasons, it's a separate legal entity. Okay, a branch is an extension. Again, if, for example, India is having 100% branch in UAE, assume that tomorrow there is a taxation in UAE, okay, and your branch income is getting taxed in UAE, okay. So what will happen is it will still be consolidated in India, okay, and with the taxation treaty, whatever you have, even if this branch income has to be consolidated again in India, okay, and again it gets taxed. Whatever is a tax paid in UAE, probably you can claim as a credit, and only the so two places it will not be taxed, only one place will be taxed. So branch and subsidiary are different. Branch is not a separate legal entity; it is just an extension. Whereas subsidiary is a separate legal entity with a capital clause also.
Yes, sir. Rightly said that tax credit will depend upon and domestic tax laws.
Yeah, yeah.
Manoj, just one maybe add on here. So your question is valid. You said 100% subsidiary, but you ended it with in its tax return. So that means you are paying taxes of UAE in the foreign jurisdiction. And under the exempt definition, it says that an entity that is tax resident in a jurisdiction other than UAE can be classified as exempt. So my take in this is, yes, it can be, subject to the taxes are paid for a UAE entity.
Correct.
So management control.
The third one,
yeah.
all branches of foreign companies in the UAE are exempted from ESR compliance.
सर जिस हिसाब से हनुमान सर ने प्रेजेंटेशन लिया है, this question should come up 100% with the right votings. I cannot see the voting, but
yeah, no, that's again a surprise. Still, there are three options: no, yes, and need to check. 12% need to check, 18% saying yes, 70% in saying no.
A lot of time it becomes an English test rather than a law test.
Rajiv, law goes with the English test only.
I agree. I am saying a lot of time it's more like how people are reading the English statements.
Okay. Here is the result. Hanuman sir.
Yeah. So as I mentioned earlier also, not all foreign, all branches of foreign companies, only if this the UAE entity's income is taxed in your parent company, only in that. I gave an example of Bahrain also. Okay, if you have a parent company in Bahrain, branch in UAE, okay, UAE entity is not getting taxed in Bahrain, so obviously the UAE entity has to file for I mean, for UAE entity, economic substance regulations will apply.
Right.
Exemption will not be there.
Yes. So launching the fourth one. So choose the best suitable answer. Two or more entities. Okay, I'll not read the question. Best suitable. Guys, I'm saying best suitable. It may be all are correct. The best suitable option. And this is recently defined in 58. We'll have 10 more seconds to go. So Jay, you can take it up.
Sir, simple. I mean, if everyone has gone through the law, this is definition of group, which has been added in the law. So 2 or more entities related to ownership control such that they are required to prepare CFS is definition of group. Foreign connected person is a single line definition. Related parties we are taking from VAT.
Yes, thank you. Now it's a very simple one. It's very simple. Should be answered within 30 seconds. Okay, ending the poll in 3 seconds. 3, 2.
Actually, some respective authorities have created a link in their portal, so which is connected with MOF. So the answers are all right.
Yes, but Rajiv has already replied. So MOF portal, directly or indirectly. Okay, guys. So over to you on the Q&A. So I'll unmute one after other. So first, Balakrishnan sir, you can please go ahead with your question.
Hello.
Yes, sir.
You are audible.
Anand Saab and Jaiprakash Saab, both of you were really batting well today. Unlike the Indian players, they miserably failed in Australia, but you really proved your mettle today. So coming to the question, what do you think if a 20% income tax is coming to UAE in the near future, maybe 2021 or 2022, how the complexion of ESR rules will be changed? Or do you think that this kind of change, the introduction of 20% average taxation, income tax, corporate tax, will, really, from the point of view of the industries, will they prefer over an ESR reporting? Thank you.
Anand sir, please go ahead.
Yeah. See, if you look at BEPS action point 5, okay, it basically they are checking basically whether any harmful tax practices have taken place where artificially you are shifting profits from a high tax jurisdiction to either a low tax jurisdiction or a no tax jurisdiction. Today it is a no tax jurisdiction. Tomorrow it can become a low tax jurisdiction also, probably 10%, 20%. So you'll have to always see, okay, globally, if it is going to be uniformly 35% or 30%, then all these regulations are not required, okay, because there can't be any harmful tax practices. Okay, and as we said, in the past we have spoken about it. There is nothing illegal today also. Okay, only thing is entities are taking advantage of the tax loopholes that are available between country to country. Okay, if tomorrow even 20% comes here, okay, we'll have to look at exemptions, treatment of certain things in the Income Tax Act over here. I mean, corporate tax. So it depends. So only thing is you have to again see whether any harmful tax practices are taken place without having a substance. So this will prevail even if tomorrow UAE comes up with a tax also.
Right, sir. We have a couple of questions got through email. So I am going to take one after other. CA Joseph KM has asked, we are allowing an overseas unrelated company to use our brand name for the production and distribution of the same product which we are producing and selling in UAE. We provide technical know-how and raw materials. On that, they are charging royalty as a percentage of their turnover, and they are raising separately invoice for the same on quarterly basis. So considering these transactions, whether the ESR provision will be applicable on their company or no?
Manoj ji, question पहले तो chat में डाल दीजिए because there are so many elements. I think I was not able to connect all the elements.
Okay. So we'll take the other one. Ashish, unmute yourself.
Thank you for the question. Can you hear me?
Yes, sir. Please go ahead.
Okay. Very quick question for relevant activity of finance leasing, where you are rendering finance to your group entities. and you are registered under DIFC or DMCC, so there also when you report the ESR or under the notification, will you have to select under the relevant activity, the relevant authority as Central Bank of UAE, or you will select the relevant authority under which you are registered, which is DIFC or DMCC?
Sir, you have to select the relevant authority where you are registered, that is DMCC and DIFC. UAE Central Bank will only come into picture when you are talking about mainland companies. Hanuman, sir?
Yeah, correct.
Next
there is
is
a relevant authority chart is given in the Ministry of Finance website. Okay, you can go and refer who is your relevant authority and then accordingly choose it. Actually.
Okay, we go on to the next one. Mr. Kranti, please go ahead. You are unmuted.
Yes, sir. It's a kind of basic question, sir. We have a main company in DMCC and we have a branch office in mainland. And only branch office is carrying out relevant activity, that is IP activity, and which is not high risk activity. So and branch don't have any separate financials, and it's don't have any physical existence. So when it comes to reporting compliances, do we need to file a ESR return for a main company giving the details of branch, or do we need to go for a branch with a proportionate details?
As we said, Kranti, this is a composite return will be there, notification, where the head office is located. If it is located at, you mentioned DMCC or DFC, correct? There only you will file, and you will add the branch details as whatever is in the mainland company, which is carrying out the relevant activity. It is one composite notification and return, and then you will be filing in choosing DAFC as your regulatory authority.
Is Divya. Divya, we have unmuted you. Please go ahead with the question.
Yeah, thank you. I have very quick question. One is basically one of our companies chartering and then sub-chartering the vessels to foreign companies. Is chartering service coming under distribution service as well?
You are chartering the ships basically.
Yeah, from the third party and then just sub-chartering with a markup to all the group companies, which includes UA companies as well as foreign companies.
Who will be managing, who will be conducting the shipping activity? Your
the operation is done by the real owners, so third party, but use of ship is done by these other group companies who are into bunkering and other shipping activity.
I think we'll
so
have
this
to look
company
into,
only does
it may be a service center business, or you are not leasing, no? Is it a lease agreement or it's just a service agreement?
It's a charter hire agreement.
No, okay. Divya, what you do is basically you're chartering for a specific purpose, right? It's not a period specific charter that you're taking from 1st of April to 31st of March. That is not the case. Based on the requirement, you're just chartering the vessel, right?
No, it is a time charter. So based on period.
It's a kind of a lease agreement, Jay. It's kind of a lease agreement.
What is the size of the lease agreement? It's for 10 years, 5 years, 1 year?
No, 1 year. Less than 1 year. Yeah.
It's the right to use of assets they got through a
lease, actually.
different agreement, actually.
Correct. Now, since it's a chartering, you are not running the operations. You clearly said it. For shipping business, you have to run the operations. You are not running the operations, so that this will not go in the shipping business. Now, coming to leasing, leasing is financial lease, not operational lease are not getting covered here, as per my understanding. This, when you say it's a 1 year 1 year lease, it's basically an operational lease. It does not qualify for financial lease. So, according to me, you are not falling in under either shipping or leasing business. That's my understanding, sir.
Yeah, and service. What about distribution of service?
When you say distribution of service, when there is a specific criteria of leasing, it will never go into service. When we go into service, there is nothing as an underlying asset which is getting leased. When you have an underlying asset, you are falling into leasing business, and now you cannot go into the servicing part of it.
Okay.
Just a matter of caution, it may constitute to service.
Yeah.
If you have not taken the leasing rights and transferred it. So just to look at the agreement very carefully.
That's what I said in the beginning. We'll have to actually go through the agreement, because these are all very tricky things actually. You'll have to see whether you fall under finance lease or service center business actually.
Correct. Divya, you can share your details with Hanuman sir and Jayaprakash. Both of them will send you a proposal and then you can.
Otherwise, post January is fine.
Yeah, Sanjay sir, over to you.
Go ahead.
Yeah, morning everyone. My question is regarding a headquarter entity. There is a headquarter entity which has all the adequacy tests passed here, and it is supporting the entire region. However, it does not invoice its cost to any of those entities it's supporting. But as a general practice, at the end of each month, whatever expense is left in the profit and loss account after adjustment of bank charges or revaluation, that is zeroed out and invoiced to the parent company. Now, is this headquarter company then considered to be earning revenue?
Sanjay ji, the fact that you are end of the month you are recharging back, okay? So in your books is either you offsetting with the expenses or you booking expenses, and on one side you are booking a revenue. But if you look at substance over form, it's a revenue only. Yeah.
Oh, thank you.
Okay, Raja sir, we have unmuted you, please.
Hello, sir. Good morning. I have a question regarding submission of financial statement. Here, one question in the annual report is saying whether your financial are audited or not. In my case, I have a company which is like a group of holding of a group company. They have a consolidated audited financial for 10 companies. Out of that, only one company, my holding company, is applicable under ESR. So how I should file? Whether I should file a single financial statement for single company along with consolidated audited financial, or should I file only single or both? Like mention that my financial are audited, and I'll attach both together. How should I do that in that case?
Standalone will do because all the other things may not be relevant to them. Okay. So you just remove the standalone from there. If it is audited, submit the standalone audited. If it is not, you can just submit the financial statements. Yeah.
Okay. Balaji sir, please go ahead. Okay, before that, whatever questions I have received on the email, I have shared with both the speakers, and I believe covered during their presentation, or they will answer themselves on that. I'm not going to take those questions. I'll take the live questions here. Balaji sir.
Hello. Yes, sir. You're audible.
Yes, sir, you're audible.
This is.
Sir, you're one of the questions.
Hello, yes.
One of the question I already asked in
yes,
the.
Yes.
So ask for another one now.
Yeah, I know. Thank you. I got another one. This is for Prince of Akranine, Mr. Jaiprakash.
Boliye, sir.
Yeah, father of E-Papa.
Please, sir, please go.
Well, this question is, you were telling, you said that if minutes of board meeting is relevant to January 1st to December 2019. But now these things have become clear only in 2020, and especially in August 2020 only we got the revised or final regulation on ESR. So do you think there is a time machine or something like that where we can go back and do the board meeting and minutes?
Perfect, sir.
Or what is your suggestion? Because we have not done that one. We do have leadership team meeting every month. All the department managers and CEOs sit together and we do have minutes. Do you think is it sufficient to disclose?
Perfect. I love that.
The session is recorded on YouTube. Huh?
I know. And इसीलिए मैं बात कर रहा हूँ. I am saying perfect question. And if I have to address it, I will say, sir, we are chartered accountants, right? And we have gone through company law, company act in India. There we know the importance of documentation. It's only thing when we came to UAE, we did not put emphasis on it. So we cannot say that the requirement was not there. If I go to CCL, I mean companies corporate law, there is a requirement that you have to document it. You have to have the board meetings, you have to document all these papers. But since no one was looking into it, because we are control driven, right? No one comes for checking, no one asks for it, we never provide it. So it's a mistake on your part that we see that then when we say that we have not documented it, because the requirement was always there, it was not the control. Right now, if we don't have fines on the road, we will cross from anywhere. We are not crossing because we have large fines, right? Similarly, documentation requirement was always there. It's only because the fines were not there. That is why we are not documenting. How to come out and be clear to FTA, say humne nahi kiya, I am really sorry, we will do it now. Maybe they will penalize you. That is the only way out, but please start documenting going forward. That is my suggestion. Hanuman sir, please go ahead.
Yeah, I mean, see, they also mentioned that pragmatic approach has to be taken. Okay, so that is good enough to answer what you are asking. Okay. Second thing, regarding the non-conduct of meeting, Jay was mentioning, saying that this pertains to 2019, but this notification can also happen for financial year commencing from 1st July to 30th June 2020 also, which will have a 3 months window where the COVID was there. Okay. Probably at that point of time, some of them have taken additional directives and implemented that. So COVID impact will be there. Okay, for them, the notification is due on 31st December, whereas your return will be due only on 30th June 2021. Okay, still you get prepared for all those aspects. One is up to 30th June, going forward for the next 2 quarters or probably 3 quarters also.
Sir, about these meetings, I have one question of, like, we can do a board resolution or board meeting either by circulation or by video conferencing. Let's say all foreign nationals are the directors, but they have residence visa of UAE, but they are doing board meetings through teleconferencing.
Yeah, but
by circulation.
Yeah, Manoj, they said that the quorum has to be physically present in UAE. Okay, so whatever is his quorum, you can do circulation, video, everything is allowed, but quorum has to be present in UAE, and they are also recommending strategic decisions to be taken when majority of the board is present in UAE. Okay. Second thing is, again, what is strategic decision is straight away linked to your core income generating activity. Anything that is relating to your core income generating activity could be a strategic decision. So today, with the technology, meetings are happening through Zoom, Team, and circulations and everything. But again, look at the substance over form. Just to comply, just don't go around it. And to prove quorum, your presence in UAE has to be proved also, correct?
Correct.
And they're not asking that all meetings you have to be here. Okay, adequate number of meetings. So you will have to manage within that provisions what it is given.
Correct. So we have a couple of more questions. So quickly we'll try to finish this up. Go ahead, fast.
Yeah, thank you. Thank you, Hanuman sir and Jay, for the excellent session. So quickly, I'll ask the question. If the holding company is in Singapore and UAE entity is acting as a HO whilst taking all strategic decisions and also providing service to entities which are based in India and Oman, where the tax jurisdiction is there, and Oman entity and UAE entity is owned by common owner, and Indian entity is owned by parent company. So whether the ESR needs to be filed as a HO, that's the question.
Ashish, who is the HO?
HO is Singapore? HO is the UAE entity, sir, and Singapore is the parent entity. So all strategic decisions are taken from here, and operations are in Oman and India, where the entities are there. Ownership is common in terms of common owners. Oman and UAE entities having common owner.
Okay.
Indian entity is a subsidiary of the parent entity in Singapore.
Okay. See, as in the past also we've spoken, to be a headquarter, to be qualifying under a headquarter relevant activity, you don't need to be an ultimate parent company or parent company or anything. Whether you are rendering the services of a nature of a headquarter business only. Okay. So as I mentioned earlier in my example, Nestle may be headquartered from Switzerland. Okay. But Nestle also has got a regional presence in Jebel Ali or a DIP or wherever, where if Nestle is controlling Saudi or Bahrain or Iraq or wherever, they're rendering headquarter service. Basically, they are giving headquarter service business to these entities or they are giving directions and risks are assumed by the Jablali, then in that case, Jablali entity or a DIP entity will come under headquarter service and headquarter relevant activity business. Okay, Singapore entity being ultimate parent company has no relevance. So if you are rendering services to India because you are part of M&A group, or you are rendering services to Oman, these and you are making some revenue, this will be coming under headquarter service center, headquarter business, actually relevant business.
Thank you. Sumit bhai, go ahead.
Okay, so I have a small question. This is regarding a company which is providing distribution and service business already, and is filing for the distribution and service center business. They are also doing cash pool arrangements wherein they are depositing money to their Paris treasury, and on that deposit they are earning an interest. So that is one part of the question, whether it would be covered under the leasing finance. And second, the same company is doing hedging and forward currency transaction as well, and they are making some forex gains, and there might be some forex losses also. Would that be covered also as leasing and finance activity?
Sumitji, that cash pool arrangement, 100 of 2020, they have clarified very clearly, saying that cash pool is forming part of finance lease business now. Okay, so in the sense, like it will be under like a finance, so it will be covered under that finance lease relevant activity. If you are making monies out of hedging and investments or anything, those will not be a relevant activity itself in any income that you generate by investments, actually. But we need to really look into what and how you are making this thing. Are you providing any services, or just in making income out of investments, actually? If you are making, yeah.
Sorry, so this is not out of investment. Like if you need to pay a foreign supplier in euros after 3 months, so you are just hedging the euro forward rate so as to not to make a loss when you are making the payment to the supplier.
Yeah,
so,
it could be a loss or a gain, actually, correct, in this thing.
True.
So
yes,
this
it
is
can be
not
both.
coming under any relevant activity. Yeah. It's
Yeah,
purely a financial
cash
transaction.
pooling activities, about this cash pooling, can't it be qualified under headquarter business?
So the company which is making the deposit is making the deposit to the Paris treasury. So, I mean, in UAE, we are not managing the business. Headquarter may not be covered for that. And on top of that, the treasury is not located in UAE, right?
No, my question is to Hanuman sir, Sumit.
Yeah.
Sir, about this cash pooling and all, let's say UAE company has a multiple subsidiaries or branches across the globe, and they have a standing instruction to the bank about this cash pooling. So whenever there is a fund over and above the certain limit, everything will get accumulated to UAE company, and then when there is a need, they will disburse the funds, and they will charge interest and all. So can't it be qualified under headquarter business activity?
See, most of the cash pool that we came across is they give it to headquarters. I mean, their treasury functions outside UAE, and they receive an income. That's why it is qualifying as a finance lease business, because you earn an income. Here, suppose you are, the entity is based out of UAE, and it takes money from across the globe, and you are earning interest out of it. Okay. In that case, it is not a headquarters, because you are not giving, it's only a purely treasury operations. I don't know whether it can be qualified as a headquarter business, because it's a purely, you are utilizing the funds in such a way that, all your group entities will earn some income of the funds that they lend to you.
Yeah. And
So,
besides that also,
yeah.
besides that also, if you can see that, in headquarter business, predominantly the activity driven from the overall, the managerial decision making that happens. So that UAE entity will not fall within that particular preview, because the decisions are not basically driven from here. The decision with respect to the business in the UAE may be taken, but with respect to the global, there is no particular say in that. So for headquarter business to qualify, the very important and critical aspect is that people should have a relevant management decision making over the overall group level. Then only it may qualify. Otherwise, like rest all, which is operating expenditure and coordinating group activities, considered to be like secondary. But the prime for headquarter business is the decision making overall the group.
Right. So Shiva, go ahead, please.
Yes, hi, good morning all. This is related to the foreign free zone entities, which is owned and managed by one single person. So how about board meetings, minutes, those things will applicable for this company? He is a manager, he is a owner, single one person.
See, Shiva Shankar, thanks for your question. Very good question, because many have raised this particular question. And we'll have to lift the corporate wheel first thing. Okay, ownership is different from company. Okay, the minute you are a single owner, okay, you are only a shareholder. The company is different from the shareholders. Okay, so obviously, whatever we are checking is for the company, not for the owners. So if it is a single shareholder director, probably quorum is 100%, everything is 100%, but company has to conduct the board meetings, okay, and it has to report. So you have to segregate company with owners section.
Okay, thank you, sir. Mehtaji, please go ahead. Quickly, we will have 3 more minutes for the questions. Remaining participants can send me the question, which I will share with the speakers. And upon receipt of their answers, I will reply on that email.
Good afternoon, everyone. My question is, a free zone company is doing R&D activity here. They've still not started doing any IP business from that R&D. Is that an IP business?
No, there has to be a separately identifiable income first. Okay, if it is a IP, if it is a high risk IP, okay, you are not acquired the IP from anybody. Okay, it is your only. You are creating your own IP. Okay, I think until the time you don't have any income, neither it comes under IP or an high risk IP as far as report is concerned. Okay, as far as notification is concerned, we'll have to see whether you fall under IP or a high risk IP. We'll have to meet with one of those conditions and then check it. Actually,
the second last, Jaya.
Yeah.
Dheeraj is there with you.
I'm not sure if he's there. Yeah, hi, good afternoon. My question is regarding the UBO declaration. So is the UBO declaration under ESR, does it necessarily be same as what we recently filed under Cabinet Resolution 58? Because I think the definition under ESR does not make any reference to the other law. So can we use the same definition, or do we need to restrict ourselves to the 25% ownership under ESR?
Jayaji, definitely it has to be in line, but today we are giving the data for 2019, our financial years commencing on or after 2019. So we'll have to go to that particular cutoff and see who is the UPO. Okay, and on a conservative side, take the same conditions what is given in 58 of 2020 on the real beneficiary definition, and arrive at the UBO and report the same UBO. Yeah.
Okay, sir. So we'll take the last question of the session. Praveenji.
Yes, good afternoon, sir.
The screen पे आगे last question है.
Yes, I have a direct question from Anwan sir, please.
Yeah.
Anwan sir, we have a one company and which has acquired shares in 6 companies. In all the companies, they have 20% shareholding.
Okay.
And UBO is the same person.
Yeah.
So we will attract the holding company business or what? I have a little confusion in this.
Yeah, because you are, it's a purely holding company because you are investing into shares or equitable interest. Tomorrow, if at all you receive any income, you'll only receive dividends, no?
Yeah.
No, I didn't really understand your question because it's a very simple holding company. Okay. Why you mentioned that 20%?
Shareholding is not mentioned because shareholding is not required, or the controlling of interest is not required in that? Even 1% or 2%?
You are having 100% shareholding, no?
Not 20%. Only 20% shareholding one, another 20%, another 20%.
Okay.
Like that.
Okay.
Proper planning,
even
sir.
if you invest 10% also, you have to see from the investing company aspect actually. If you are investing into the shares of that company, so that becomes a holding company activity as far as the investment company concerned actually. Okay. In the investing company, whether you are holding 1%, 10% or 20%, 100% doesn't matter. What is your activity of the investment company? That is where you are filing the ESR, correct? Is my understanding correct?
Muted, sir.
Okay.
Okay. So I think it's time to conclude the session. For that, would like to invite our dashing chair, Anurag Chaturvedi, to make conclusive remarks on the session, understanding and members.
Thank you, CA Manoj Agrawalji, for coordinating the session so well. And thank you, speakers of the day, CA Hanumanta Kumar, our past chairman, ICI Dubai chapter, CA Jai Prakash Agarwal, executive committee member, and all the participants of today's session. I think one thing which is very important has come up is that we need to place a caution when we're doing the reporting. We need to understand each and every activity in its own context. A general principle applies to all. Theory will not going to work here. Each case need to be analyzed in detail while we talk about the notification, whether we need to file notification, whether we need to do the reporting. All these things has to be looked into pretty much in detail, and the detail that is required has to go through the law. So what we need to see that each and every activity, whether it's duplicate activity, duplicate reporting we want to avoid, or we need to provide the substance test in that relation. We need to see, think through, and then report precisely. That is the most important thing that I learned out of the session. With respect to the confusion between headquarter reporting, service center reporting, or distribution, or a lease finance business, the multiple reporting, again, what need to be seen here in my experience that I've seen until now is that people need to really understand things in detail. Which is your core function? So when you see like headquarter business, when we talk about the lease finance business or service center, we need to see which activity is in principle and which all two remaining activity are ancillary to each other. So those are some of the critical things that need to be looked into while you submit your ESR report. And if there's any question, we are always here to answer those questions through our groups. So you can always pass on your specific information in our text groups. So the members are there to assist and to help and advise. And I'm sure that we all have understood the ESR notification and reporting from Jay and from Anwant sir much in detail, because the simplification that Jay Prakash Agarwal has done was pretty good, e-papa, which is nice, and the complete detail on ESR front from Hanuman sir is absolutely nice. And question and answer, most of the question the Manoj has already taken into consideration. So thank you very much all of you today for attending the session today. Thank you very much for deliberating this well-known subject in detail, and we continue to bring such events in due course as well. Just before we close up and do the VT vote of thanks, I would like to ask each one of you to block your calendar on 26th December for our annual international conference. There are a lot of surprises. There are a lot of things and activities which we have planned, and the entire managing committee has worked very, very, very hard. Each and every single thing and each and every session that you're going to see on the flyer, trust me, it's curated, it's well thought through, it's well prepared. So do read the circular carefully, because we'll be having a raffle draw on circular as well. Whoever reads the circular, they'll also get a raffle, and raffle prizes, I can just give a hint that those are going to be something pretty different. It's going to be the one that you like it. So please block your diary for 26th December and detailed circular to follow tonight. I mean, I'll try to send it before evening today. And looking forward to welcome you all once again. Signing out, Anurag Chaturvedi, Secretary,
Before
chapter.
Before
Over to
that,
you,
we
CA
will
Manoj
ask.
Kumar Agrawal.
Yeah, sorry. Jay, can you please share the whiteboard to get the feedback from the members? You can write it.
Shared.
Yeah. Yeah. So how to write on this?
Everyone has the writing power. I mean, they can just go and
annotate. They can annotate here. I think you have to enable the annotation function here.
1 second, let me check. I should have enabled it. Enable at done. Annotation has been enabled.
Yeah, now you can write. This is I'm writing.
Yeah. Thank you. Sorry.
Super.
That's a super. Thank you. Jaspreet साहब लिख रहे हैं great.
And trust me, some of the feedback that you all has given is gone into the souvenir. And this year's souvenir is also a very detailed work. We have all put together a great amount of deal. Yesterday, whole day, I was there along with C. Sangeeta Nahar on the souvenir final print. So we have put together a lot much emphasis on what we have covered this year. This is our 83rd event of the year. And I'm sure you all are enjoying the good time. And the painting on the board reflects our passion on this,
Yes.
which is so good, actually. It's so good.
Excellent. Thanks. Sorry. Thank you, Even. Thank rocking.
Is Sangeeta is there? Sangeeta, can you unmute yourself if you're there?
Yeah, we can unmute all. Jeff, can you please unmute everybody?
I will do that.
We need to thank the formal vote of thanks before we unmute
It's
everybody.
done.
So,
Secretary sir, when you were not there, it was already done.
Done.
Okay, that's
And
fine.
anyone can unmute himself or herself. That's possible now.
Thank you.
Thank you.
Thank you. Thank you very much.
Thank you, Hanumanji and Jay Prakash.
Thank you very much.
Thank you so
Thank you,
much.
everybody.
Thank you, everyone. Thank you.
Thank you all.
Thank you, guys.
Thank you very much.
Thank you very much to all the
Thank you all.
speakers.
Very much.
Thank you.
Anyone can unmute himself.
Excellent presentation. Thank you.
Thank you, all of you. XCOM. Bye-bye.
Thank you. Thank you very much.
Thank you, Hanumanji and Jay
Thank you
Prakash.
very much.
Thank you so much.
Thank you, everyone.
Thank you all.
Thank you, guys.
Thank you, everyone.
Thank you very much to all the speakers.
Thank you very much.
Yes, so
Very much.
can you
Thank you, Anu.
please
Thank you, Manoj.
continue the live streaming now?
Thank you. Thank you all of you.
Stop the live stream.
Thank you very much.